Hello, everybody. We are now live with this trading session for today. I'm joined by Richard, who I'm sure the viewers know by now. And we're waiting on one more trading coach. He's running a little bit late, but he'll be here any moment, Igor. But while we wait for him and wait for viewers to actually come in and join the session. Oh, Igor's just joined. Let me add him. Hello, Igor. How are you doing?
I'm okay, thank you.
Hello. Is it late for you already? How's it going? Can you hear us?
Yes, I can hear you right now. Okay. You're good.
Awesome. We're just going to give it a few minutes. We're going to have a bit of the old chat as we wait for, some viewers to come in and populate the actual live stream. But yeah, how's everyone's trading week been so far? I mean, I know it's Tuesday only, but any good trades yesterday?
No, I'm flat all this week. I need to be cautious because all these movements and a huge range in Forex market, for example. And how are you on your side?
Same here. Also a little bit on the sidelines. Every time it looked like a setup was going to happen, market just kept going down. So didn't have any significant pullbacks either to short. So according to my strategy. So yeah, it's been a bit frustrating, but let's see. As you mentioned, we got quite a few news events this week as well, right?
Yes.
Was it CPI tomorrow? Yeah. Big one.
Double check. Yeah.
CPI tomorrow. And then we got Jolt's job openings
today.
Yeah, that's coming out in 40 minutes roughly. But yeah, I mean, we'll see how it goes. This is part of it. I mean, we're just depending on which market you trade, obviously. But for me, the S&P 500, yeah, we're on. We're pretty low down. We haven't been this low since November, pretty much last year.
Yeah.
I'm expecting it to drop a bit more. I don't think it's actually going to catch support a bit, maybe a bit lower down, maybe around the sort of 525 area around there. That's my next area of interest, really. But for potential, decent either reversal or at least a retracement. I mean, we've had a bit of a retracement, but that's been over the Asian session. And yeah, I mean, we'll see. Anything can happen. It's not all doom and gloom yet, but
no.
I'm hoping, fingers crossed. I want a bull market.
Doesn't feel good though.
I want a bull market just like this, my nice little trading ball here, giving me good luck. I'm going to rub it. Hopefully it, does something.
Have to get a bear somewhere.
I might do. I might have to get the golden bear now. But all right. I'll say we can pretty much start. Hop on the charts. Who would like to go first?
Okay, I can make some kind of introduction of the economic events, maybe.
Please
share. Factory.
I'm going to add it to stage.
Okay. Yes, I hope that we can see right now.
1 second.
Yes, there is.
Yeah, there we go.
Yes, and just watching the news and everything. First, what I want to say, I monitor all market news sentiment just to see are there any crazy news from Trump or other things. So in last 24 hours, he made one on all social media, one very, I can use the word harsh statement. In that statement, he said, we don't need your cars, we don't need your lumber, you need your energy, and very soon you will find that out. And it was against the Canadian dollar. And in that moment, I see that the markets really react on that. And Canadian dollar is weak, as same as Japanese yen. And I monitor all that news related to Japanese yen and Canadian dollar just to see what is there. The problem with Japanese yen are two things. just to mention to people maybe who trade US dollar, Japanese yen, that there was a survey, and the Japanese Cabinet Office showed economic conditions that index fell 3 points there, and there is some kind of the pessimistic tone about economy for Japanese economy.
Mhm.
And after that, they talking about slower GDP in Japanese, and all this stuff. I can tell that we can see on the chart later when we start to analyze that. We can see that Canadian dollar and Japanese yen are very weak, while euro dollar and British pound dollar are the strongest one, while US dollar struggle in some consolidation phase. And using that data, I monitor all news that we have. Like we said, tomorrow is, I think, the most important day, because we will have a core CPA for US dollar. And as we can see right now, we expect a little bit weak data. So we can see a lot of things there. It's very hard to trade CPA. Sometimes several hours after CPA, I do not touch anything because it can be very volatile. And for me, I think that the best thing is to just monitor the market and wait for some opportunities. So what do you think about this economic situation and fundamentals right now?
Yeah, I mean, for me, I just avoid the fundamentals. I look at the numbers that come out and see how the market reacts, and I base it on literally once the numbers come out and the market reacts, I base my decisions on that. Because at the end of the day, it's down to what people perceive, right? Even if numbers can be positive, sometimes it doesn't even have that much of an effect. Again, I just avoid news. Scalper, so, but it's good to know. It's definitely good to know. I don't know, Richard, if you want to jump in on anything.
Same my side. Trade what the charts show you, but definitely learned my lesson trying to trade news in the past. So I'm like Igor, I'm going to pretty much be sitting on the sidelines, I think.
Yeah.
See how things react. Monitor those big levels. I mean, Igor, you follow the Forex markets, right? Mostly.
Yes. I follow the Forex markets, and usually in last, I think, 1 year, I figure out that maybe from all these data, GDP is one of the best. So when I just analyze everything of that, and the interesting thing is when we have a GDP data announcement, there's no special move in the market, but usually 1-2 months after that, we see some kind of reaction in GDP. And I think that GDP is only indicator that really describe economy of one country. And because of that, I do not use in my trading strategy too much, but I realize it can help me just to have a good daily bias. For example, just to feel the market, to have some kind of better confidence, and sometimes to be ready to increase the position size when I am, for example, in the bias on the daily chart, on 1 hour chart, and etc. So just
when things line up,
confidence.
Yeah. You want to be on the right side of the market, right?
Yeah.
So the fundamentals do matter as well. You don't want to be. I'm assuming you trade a bit more on the longer term, Igor.
I trade mostly on a 30-minute chart or one trade per session usually, but sometimes, like last week, I can take a swing trade like I took Aussie dollar, and sometimes wait a couple weeks maybe to see the results, but usually with a very small number of lots, just low risk. And sometimes I have actually last 1 year I have a good results in swing trading. Before that I didn't trade too much, but I think as we are older and older, we like that swing trades more and more.
That's for sure.
I've heard that many times, but I refuse to believe I'm getting old. So I'm a scalper until until I finally admit it that the grays are coming and everything.
Yeah.
But
On
yeah,
my
no,
side,
absolutely.
definitely, I don't think I would call my style scalping at all. What I'm showing you is intraday swing, maybe.
Yeah.
But yeah, scalping, jeepers. I used to work on the trading floor in South Africa, and some of the guys are doing 200, 300 trades a day, high frequency.
Yeah, that's
Yeah,
another level of scalping.
I could manage like 10, 20 maybe. And even then, it's like you're so tired, and if it didn't go well, very frustrated, right? So
Yeah.
very tiring. So no, I can't do scalping, like quick succession scalping,
Yeah, definitely not. Neither can I. I mean, I do one trade a day.
Yeah.
20, 30 minutes maximum, in, out, done. Whether it's
Gotcha.
good or bad, I'm leaving the desk. So that's yeah. I mean, technically, I would call it scalping, but a very reserved scalper, I guess.
Yeah.
But all right, cool. Let's jump on some charts. Igor, I don't know if you want to go first.
Okay, no problem.
Yeah.
We just show little few things about some setups that I'm watching.
Okay.
I will just go. Okay, so let me start from the British pound dollar. What I'm looking right now is a Monday opening range. When we put Monday low and Monday high, we can see how price, starting from the Friday, we can see the high at 1.2950 and the low about 1.2860. And we just move up and down all the time. Maybe from range traders, this can be good setup right now to enter into trade with a tight stop loss and to reach the target. However, like we know, we will have very soon the news for US dollar, so it's not smart to trade right now. But this is the little bit boring setup. As some watchers know, I'm using a trend lines and relative strength index indicator. However, in last 3 days, we don't have a clear trend for British pound dollar. We're in some kind of consolidation phase. As we can see, we had a last week really bullish British pound dollar. And right now, last 3 days, we are in some consolidation phase. So maybe it's smart to wait and see what is the best approach here. My wished preference is the price to retrace. So I would like to see how price breaks 1.2860 and to go the first target 1.2080 and then to here in the around the level 1.27. So I would like to see a deep pullback and then continuation to the upside. That thing is correlated with US dollar currency, just to show. So we just touched a very important price level around 103 level. What they want to see is rejection of this support to go a little bit upside, maybe 1 week or something like that, and then again after that to go to the 100 level. This is my projection here. I put the pitchfork here. I put the low and the high of the last year as a pitchfork high and low. And then I'm watching, as you can see, we are on the support level here. And I believe that we can go to the 100 level or near. So I believe that British pound dollar, euro dollar can reach new highs based on that. On the other side, what I want just to show too is euro dollar. Euro dollar is the strongest currency pair right now. We have a really one of the biggest push in the last 2 years for euro dollar. We are really overbought right now, but this is not the catch because we have one very important level here at 1.11, and there is a big chance to touch this. But like I said, I would like to see some kind of the pullback and then to go up, because only healthy pullback give me some kind of confirmation that we will have a strong, very strong bullish trend. So I'm watching that all the time. And of course, just a few minutes ago, I talked about US dollar, Japanese yen. I talked because of the news. As you can see today, we touched support, and right now we have some kind of bullish daily candle. Of course, it's nothing in the technical analysis. However, because of this news, because of the slowdown of the economy, on all these pessimistic news related to Japanese yen, and on the other side, we see that we are on support on US dollar. Maybe we can see a little bit pullback here, but that pullback could be, in my opinion, just to this trend line, just to touch that trend line, and again go down after that. This is just my scenarios and projections that I'm creating based on charts, what I want to see, and what I just just a cheer there in that direction. However, these scenarios is something that I really watch, and my whole strategy is always to buy on support or sell on resistance, but to follow the main trend, and of course to catch the good price levels. So this, of course, is some opportunity that I'm watching, and I will see what will happen there. And for the end, just to show one more chart, just what I'm watching here, a little bit, like I said, a little bit crazy chart for me. And this chart is the chart for EuroCAD. As you can see, from 2018 up to now, we respect this strong resistance. We touch one time in 2020, another time in 2020, then we just touch this week here, and we just broke today. I don't know what will be today, of course. I just monitor this because maybe something can happen. Of course, for any trigger and maybe swing trade here, I want to see something good for Canadian dollar. But because of these tariffs and everything, it's hardly to be realistic. So I will be out of this trade, but I just monitor because this resistance, it's a 7 years resistance, very strong resistance.
Yeah.
So I just want to watch a little bit if we see maybe some crazy rejection and breakout or something, but it's just the wishes. I'm just watching, and this is my charts that I'm watching, maybe for swing trades right now, but later during the conversation I will show my short-term trades later, of course.
Sure.
So I will stop sharing right now, so
No
you
problem.
can share your thoughts.
Yeah, no, very interesting. Especially in the long term, I think you're absolutely right. I would be very interested more in the short term, how you break it down. If you use a similar strategy, do you just do that with pretty much every time frame as you go down, the same kind of breakdown, use the pitchfork, etc., look at the support and resistance?
Yes, top-down analysis I'm doing very often, but usually I'm using 30 minutes for euro dollar and British pound dollar, and I watch what's happened during that day, during the Asia session. I find important price levels there. For me, it's very important to find bullish bearish invalidation point for that day. So I say above this level, above this area, I'm bullish. Below this area, I'm bearish. And then I'm starting to create and develop some kind of the strategy there and to trade. So I can show you for today later when we discuss the short-term trades. I can show some my trades that I didn't make, but I wanted to make.
Yeah. No, awesome. I'll be looking forward to that. Richard, do you want to go, or if
Yeah,
you
I can
have
do
something,
quick.
please, by all means.
Let me just grab there quick. Share screen. Can you see my chart?
Yep.
Right, so this week I'm looking at the NASDAQ, the ES or the SPX, as well as crude oil. And as we all know, things have been pretty bearish on the indices. Not really got any bounces during my time window during the previous days. Ones that at least I was pretty bearish and still am on the indices, but the bounces that we did have didn't take out any key levels that I would like consider a proper potential liquidity sweep, if that makes sense. So yeah, it's been a bit difficult sitting on the sidelines monitoring things, but sort of is what it is. If you look here at the NASDAQ, obviously we're in 19,000s now. I think yesterday we were still in 20,000, but we've had a bit of a bounce. Again, I'm very cautious on anything bullish at the moment, since you're going to probably see how things are going to work out tomorrow with that CPA data. But in any case, we do have a little bit of a bounce forming here. Again, this on the NASDAQ after price took out pretty much just the overnight session low, which is around about 19,376-ish. And now we're getting a very strong bounce to the upside. Right, so this might be a potential bullish trade. Again, I'm not really, shooting for the stars. If the risk reward is decent, then that's something I'll obviously go for. But while that candle is still doing its thing, we look here at the ES, same sort of thing. Extended a little bit further than the overnight session low. We're also getting a bounce back up. Maybe we're going to see price test the overnight session highs on both the ES and the NASDAQ. On the ES, that's around about 5,644 currently. And on the NASDAQ, so I'm switching between markets here, around about 19,550-ish. While that is actually doing its thing, let's quickly look at crude oil. Also a very nice strong bounce to the upside. I think it's almost $1.50 something cents here already. But if you look in the bigger picture, this is just in a 5-minute chart. Potentially stuck still in quite a big range here on crude oil. With crude oil, I like to do the same thing. Would like to see price take out a key level, give me what I call that liquidity sweep, potential reversal, price structure breaks, see if I get a fair value gap to materialize, preferably before price actually breaks the previous market structure, and then use that as a trade location. I just want to quickly switch here to NASDAQ. And you can see that's a beautiful sort of run of these lows. There was once just after midnight, almost a double bottom type of thing. Price just took that out now. And this was right at the open, 9:30. So if I switch to a 1-minute time frame here, and just open that up a little bit, we can see, and hopefully I'm not missing any setups here while I'm explaining this. Price was obviously making lower lows, lower highs, and then broke that lower high. So we have a price structure change there. And this could all just be a little bit of noise, you know what I mean, from the open. But yeah, there we go.
Really interesting.
We're going to have a fair value gap that formed while price was actually breaking through that previous price structure point. And if you have a look here, we just had a touch of that literally 2 minutes ago. So that should have been an entry. That being said, it really depends on the range of where my stop loss would have gone. Have I taken this trade? And you see that's almost 100 ticks or 100 pips. So something I would definitely consider. A little bit too wide in for my liking, to be honest with you. Just from a risk perspective, sure, I can go change the amount of lots that I want to be trading, but obviously the higher you enter into these trades, you want a good risk reward ratio, maybe trading back to this high over here. That's pretty much just a one-to-one. So, not the ideal setup from a risk perspective. So it's something that I do consider, obviously, always look at the risk. But this would have been an entry right there. If, let's say, the entry level or that fair value gap was actually situated a little bit lower down. Which it wasn't, so it's not a trade I would have taken anyway. But if I just had to purely think about the actual trade or the strategy itself from an entry perspective, then as price touched that upper side of that zone, then I should have been in there. Now, I don't like to trade price retesting that zone again, especially if there was an initial move into the direction I want to trade it, in this case long. Because I quite often find, if the more price retests those zones, the likelihood of it's going to be broken increases. You know what I mean?
Yeah.
So something you could have done here, again, I'm not going to take this trade simply because of that fact I just mentioned, is that if you wanted to reduce the risk on this, rather than entering, in this case, for a bullish trade at the upper end of that zone, rather try to potentially place your buy order sort of in the middle of the zone, rather at 50%. But even then, that's quite a little bit better, almost not 100 pips like before, but around about 75, which is a little bit more acceptable in my opinion. But from just a trade entry perspective, that is what I'll be looking for. It just hasn't worked out just yet. But that's quite a nice strong bounce there. Potentially they're gunning for these overnight highs. And let's see. I don't know if you want to show something there, Sam. Let's have a look at what the
Yeah, I can do. I can do. All right, let me load this up. Where are we? Present. Share screen. Share. And should be up any second. I think someone. All right, you should be able to see my charts now. Yeah, so I was keeping my eye on it just now. I'm interested in this yellow box area. There's a little gap in volume. I'm quite interested. Potentially, we could be going down from here and continuing going lower. But to find that out, I really got to be looking at the footprint. I'm seeing a bit of heavy volume now starting to come in, but it's all a bit clustered at the moment. I can see buyers are trying to break above here. Let me drop to the 5-minute really quick. So you can't see it as well in the 5-minute, but the 15-minute gives you a very clear picture of. So I'm going to drop back to the 15-minute. You can see a lot of buyers are entering in this area, but what I ideally want to see are more buyers entering and the market starts pushing against them. And as we start going back down, they're having to be, they're squeezed out and they're forced to get out. But I'm just kind of watching now because this area right here is quite interesting for me. Mainly just because it's a nice little gap in volume. We had a lot of heavier volume up here, which the sellers are basically controlled and pushed down. And sorry, it's starting to move. So I could potentially be taking a trade any minute. So I'm really just watching more like down here. I want to see the big sell numbers come in as we get below these buyers and see them starting to get nervous and dropping off. If we do, I do have a sell position. Let me just load it up on my account as well. I will explain it a bit better in a minute. It's just I can't really keep my eye off it at the moment, just in case I miss the entry. So it's a bit bad timing, but I will explain like the structure part of it in a moment. I really want to see big numbers like 1,000 plus on the sell side, below these below these heavy buyers right here. If we see that, I'm happy to jump in for a short position, but the buyers are defending it. They're not letting go of their position yet. They're being put under a bit of pressure, but they're really defending this area. Just want to take a look at the depth of market. Yeah, this depth of market is rubbish. I use a different one, but I can't show it on because it's a separate program, so I can't do two programs at once, annoyingly. But I'm not seeing anything too special in the depth of market. Yeah, they're defending it quite well. So if they continue to hold off the sellers, then potentially we are pushing a bit up. But my bias, like I said, I don't really want to be buying in this market, just because we've had such heavy selling in the previous days. Like only in the Asian session did we kind of move up, but that's not really volume based. That's just more the market, going up because there was very little volume, sellers getting out. That's just really it. I mean, it's not like new aggressive buyers coming in trying to push the market higher. So I'm not taking that push up we had in the Asian session this morning as anything too worrisome for the sellers as a whole. I'm not seeing that as like, oh, this is going to be a start of a new trend or something. Because there really wasn't any volume behind it. It was just the market drifting off because of lack of volume, essentially. But yeah, I mean, this area is interesting. I've got to keep my eye on it. The buyers are defending it quite well, but the moment these buyers, if it does go against them and they start dropping out, they're going to be forced to exit their position. They've put a lot of money on the line here. This whole candle has a lot of buyers in it. 1,000 here extra on the delta, another 2,000 near the top, another 1,000. It's a lot of money on the line. They're going to try and defend it hard, but the question is, are they going to be able to break through all those sell limit orders and all those sellers? Are they actually going to be able to make an impact? They might do, but that's why I scalp, because my bias can change very quickly. They defended it quite well. They are starting to push it up. So maybe there wasn't a trap here. They're now getting more confident, entering again. And the sellers seem to have given up trying to absorb it. So sadly, there wasn't a trade right there. I mean, it might still happen, or still kind of wait. But I think the buyers have got this one. I don't think if it's going to reverse.
Very nice push upwards now.
Yeah, if it's going to reverse, it's not going to reverse on that area now. So now really my next area is, again, this area here that we kind of reached earlier today. And then ideally, I would love to go back up to this area here. Because if we do, I think there would be a lot of sellers jumping in around here. So I've set an alert, but whether we'll do that today, we might. I mean, we could easily do that today, but I don't think we'll do it in this session. We also do have news coming out in 10 minutes. So, if I did enter, I would have to also recognize that I'm probably getting out before the news drops. And the time, 10 minutes doesn't give me much time. I mean, I could have scalped a little bit, but it's not really ideal. So yeah, kind of a good thing. Probably it didn't work out just yet. But yeah, we did have sellers trying to push it down again. The buyers came, absorbed it, and they're trying to push it up higher. They did. They defended that area very well, as expected. But ideally, what I would love to have seen is we push down just like, to this area here, and you just see it all going red, as all these buyers are like, damn, we're losing money, all getting out. And then the market just boom, 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 starts dropping hard. But we didn't see that. So we're going to be patient. We're going to wait. Someone is going to get trapped. Someone is going to get in this position they don't want to be in. So until that happens, There's nothing there right now. But in terms of structure, I'll explain that of what I see. Again, I'm mainly only using the volume profile to pretty much get all my levels, like support and resistance, so to speak, right? And I'm looking for two things on the volume profile. I'm either looking for low volume trap between heavy volume or just heavy volume in general, right? So, for example, if we take 2 days ago on Friday, if we look at this volume profile here, let me get a little pen tool out. I don't know where it is, to be honest. I never used a pen tool. Is there a pen tool? There probably is. It's definitely not that.
Yeah.
All right, I don't know where a pen tool is, but I'll kind of draw it with a path tool. You can see this kind of like, bigger sort of area of volume, and then it kind of drifts off down. Like that's always good to look at. So that area there, I would keep my eye on it. So if the market came back here, I know there's going to be a bit of it's like a pocket of heavy volume, right?
Yes.
And yesterday we kind of started off very low, and the volume just kind of built up as it went down, and then really just peaked. And that's really because it was towards the end. Everyone's getting out their positions. The volume just spikes up, right? But yeah, so the volume profile, you can kind of guess a lot, not guess a lot, but you can see a lot just from the shape of the volume profile itself.
Yeah.
But I like to look at individual nodes that are kind of trapped, between heavy volume, like this node here. You can kind of see it's all heavy, and then it's just a random, very low volume node stuck between heavier ones. And that's usually gets created. It's similar to a fair value gap, actually. That's kind of like what you can kind of look at, but from the volume profile. It's just because price has moved so quick through it, there was heavy volume above and below, and it just kind of gapped through it almost.
Yeah.
Those areas usually react quite well when, and you saw it here the next day, price reacted quite sharply to it. So I like to look at those areas as well. Eventually it does break through, comes back, retests, and continues down. So I like to look at those areas, draw them out, and overall just heavy volume as a general. Obviously I'm keeping my eye out. But I can see it's pushing down a bit. What happened? Oh, okay. Now I'm not going to enter because we're so close to the news now, but I think the buyers are exiting. They're getting out at break even now. These buyers, they realize it's not going to go up, and they're basically getting out at break even. So yeah, I'm not going to enter because we're too close to the news now. But yeah, you can literally see, buyers that were entering, pushed up a bit, it came back, and they've just basically got out at break even, right? And the buy pressure has been therefore relieved from the market, and we should see a bit of movement down. But you could have new buyers again entering, protecting. And whether it's these buyers are still in the market, who knows? But I think a lot of people, I'm not expecting a move now right before the news. I think a lot of people are going to hold off entering this close to high impact news. So yeah, we'll see. After the news, we can tune back. But yeah, as soon as we broke through that, I'm expecting the market to push down a bit because those buyers have exited the market. They've relieved some pressure. It should be easier for the market to move a bit now, going down. But yeah, let's wait 5-6 minutes until the news comes out and check back, see what happens. Robert says we've got a comment. My favorite viewer, Robert. He's like yes. my number one super fan. Sam is truly the GOAT. I appreciate that, Robert. I'm still trying to wrap my head around this volume profile. Okay, I'll explain it in a lot more detail in this session for you. We have a few minutes actually. I can explain it before the news. Let me just get a nice sort of clean. Oh no, I'm on the footprint. 1 second. So the volume profile, Robert, is very simple, right? It just shows you how much volume was on each price level. Now these bars, you can obviously change the settings to be as much as you want, right? I set it to 15. That means 15 bars. But if I set it to, like 40, there'll be loads of tinier bars, right? But essentially, it's all the same thing. You can just kind of got to squint your eyes a bit more. I personally like 15. I just like to have a bit bigger bars. I can see like a bigger area and kind of get a better gauge. And all it's showing is basically where the heaviest volume is and where's the lowest volume, right? And every level, it shows you how much volume there is. So when you see a big line across it, that's called the point of control. And that is where the heaviest volume was traded, right? But that doesn't necessarily mean heavy volume equals, it has to go in one direction. It can usually consolidate quite a lot around heavy volume areas, because that's just where we know historically a lot of transactions took place. A lot of buying and selling takes place in heavy volume areas. So there's a good chance if it goes to a heavy volume area, you're going to have a bit of a battle occur, right? A lot of buying and selling is going to occur. That's when you drop into the footprint to try and figure out who is winning that battle, who is getting trapped, who is having to exit the market, and you use the transactional data to kind of gauge. You let them battle it out, and then as the battle comes to an end, you can kind of start seeing who's going to win. That's when you jump in, right? As for the lower volume areas, it works more when the market's already moving, right? So if you've already got a moving market like here, right? Like the market's pushing down, created this kind of gap in volume, and it's pushing up, it could reject off that area and push down again. That's more what these kind of like nodes, these volume nodes, that are these lower volume nodes trapped between heavier volume. See them similar to like fair value gaps, right? They kind of react within a trend, so to speak. But if the market is going sideways, it really doesn't matter too much. So it really, you got to take it into context if it's a trending market, right? It's more like areas, it's kind of like Fibonacci in a weird way, right? Like an area where it could retrace to and then reject and continue, right? So you kind of want to look at both areas, right? If you're in a trending market, mark out these kind of areas that are lower volume, trapped between heavier volume, mark them out. And if the market goes back to that area, there could be a potential for, a rejection and and it continues back in its original direction. Heavier volume areas, that's where volume builds up, right? So you want to sit back, don't make any hasty decisions, see who's winning the battle. And when it becomes clear that someone's getting trapped and putting too much money on the line and it's not going their way and they're having to exit and the pressure gets released, you jump in against them. That's essentially it. So there's two kind of ways to look at the volume profile. Let's just have a quick look at the footprint, what's happening. So yeah, we're still kind of just buzzing around that area. News in 2 minutes should be interesting. So yeah, we'll just sit and wait, I guess. But we'll see.
Couple of minutes.
Pen tool is where your path tool is now. Okay, so there is the pen tool. He goes, okay, I was using the high volume areas for support and resistance, and then I was like, oh, low volume, it's blowing past those. But now that you show that, it makes sense. Yes, exactly, yeah. Absolutely. High volume areas, I mean, it can work as support and resistance as well, but generally you expect a bit of a battle to occur, It's like, it's only high volume because a lot of buyers and a lot of sellers were transacting, right? If it's not high volume because only heavy buying happened or only heavy selling happened, it's usually quite equal. Someone eventually wins, obviously, but yeah, it's only high volume because everyone, buyers and sellers are battling in that area. So we got just under a minute until the news comes out. Let's see, let the craziness happen. And then we can. This is part of it. News is always fun. And this is where I drop 100 lots right now, just before the news comes. I'm joking. There we go.
Yeah,
bit of
already starting off, but getting quite volatile there.
Yeah. Give it a few minutes, let it cool down, let it calm down. Let's actually see what the numbers were. Let's refresh Forex factories. It was
7.74.
7.74. Yeah.
No, it's going to go up.
So it's going to go up, yeah. Everyone
Who
getting
knows?
liquidated who was... I mean, hopefully this starts a bit more positive sentiment and we start seeing a bit of a bull market, because truth be told, I'm sick and tired of this bear market right now. Because it's really hard to trade.
It
Because
is,
I
but
can
you
only
know how
really...
long it can go on for, right? Markets will
That's
stay
it.
irrational longer than you can stay liquid.
It makes it hard for me to buy. Do you know what I mean? I'm a bit scared to buy in such a... It's funny because I'm not too scared to short the market when we're in a bull market, right? But vice versa, I'm a bit more... I don't know. Maybe that's just me. Maybe that's just something in my head that I don't know, drilled into myself.
Well,
But
you need to learn to trap the bears as well, not just the bulls, right?
that is true. That is true.
Or the other way around. Sam the
I
trapper.
think, yeah, the trap. Robert says the volume footprint. I think I just have to spend time just watching and changing the way I think it's happening. Like you say, just because it's green doesn't mean those are buys and the way I normally think. Absolutely. If it's green, it could be fresh buyers or it could be sellers exiting. So I like to start at the beginning of a move, right? So I like to kind of base my story at the beginning of volume entering. So that's why I like the US Open, because that's where all the volume starts, right? You can literally see on the standard volume tool, all the volume picks up at the US Open. So that's where I like to begin the story, so to speak. And whoever's dropping a lot of contracts at the US Open and it goes their way, I say, okay, these are fresh sellers right now entering the market. And if I start seeing lots of buying happening lower down, I don't assume those are new buyers. Those are those sellers exiting, taking profit. That's the way I see it. So then I kind of wait and I kind of just calculate, we had roughly maybe 20,000 delta at the beginning of the move, and we've had about 20,000 exit. Roughly speaking, I think all those sellers have left the market now. So now we're kind of back to neutral. And then I look at who's entering again and kind of build a story like that, rather than just looking at it as new people entering constantly, because it is people leaving. You gotta remember that as well.
Yes.
So what have we got?
You also look at lots of effort. Let's say a lot of buying contracts coming in, or the opposite, selling contracts, but there's no real result. You know what I mean? So they're trying, and then yet it's not really doing anything. Like your ranges are getting smaller. So lots of effort, no result type of thing.
Exactly.
I can remember from volume analysis as well.
Yeah, exactly. Who's actually effectively pushing the market, right? If buyers are dropping 5,000-10,000 contracts and they're not able to push the market up, but sellers are dropping maybe only 1,000, but they're actively able to push the market down. I'd rather be on the sell side,
Yeah.
Because it's just more efficient and more effective as well. But yeah, so the news came out. We did dip into that area of lower volume. Like I said, we're in a trending kind of market. I look at those areas of points, almost like a Fibonacci retracement where you can push down. Could have shorted the market before the news, but again, that would be dangerous and that probably wouldn't have been a smart
move.
Look,
it went up first, took out those very recent highs, and then immediately sold off afterwards.
Exactly.
And typically where these news traders can sometimes get burnt.
Yeah, unfortunately, sometimes you do get blocked by the news. You will see a setup kind of occurring, and then the news comes out, and you're like, if it wasn't news, that might have been a good trade, but yeah. So now I just got to wait for the next cycle, essentially, right? This kind of move is over. I'm not looking to short it now. It's already down quite a bit. My next area of potential buying would be down here, I would say, in this area. So I've got an alert set there. And again, if it comes back to this area, I'll be interested in shorting the market. It might do. It might come back. It might start ranging, more of a bigger range. We could start seeing this happening a bit, right? Could do that. I mean, there's so many different scenarios that could play out. So I'm going to have an alert there. But at this moment in time, okay, so I did have an area pocket of volume just here where it's just gone now. But again, I wouldn't be too interested in buying. That's just more. That's more for if I was in a sell position, I would be interested in potentially taking profit around this area if I see buyers trying to, getting out, or getting in, or sellers getting out. But I'm not looking at that area as an area to actually enter the market. But that's it really for me at this moment in time. Hopefully we get something.
Sam, do you have some special time when you buy or sell? Do you have some special timing in trading?
Yeah, mainly just, US Open. It has to be after the US Open. It can't be before. And then maybe 2-3 hours after the US Open, I'll be really looking for that kind of move. Mainly, I'm not sure why. I just, generally speaking, there's a trade opportunity within that time frame. But okay, so we I wouldn't say we missed it because the news overlapped with it. That's fine. But I would set an alert now, maybe in an hour, 2 hours, there will be another setup, and then I could take that one later on. Do you see what I mean? Yeah. So there's always that opportunity again to jump in. If you miss the first one, it's not the end of the world. But that is pretty much it for my side. So if anyone else wants to jump in, please feel free.
Nothing happening on my side. How about you, Igor?
Okay, I can just show a little bit my strategy, but please. I will just go to the other platform where I have some machine learning algorithms just to share with your audience, if that's not a problem.
Sure.
I will do that just a moment. Just to find. Okay. Just to see. Can you see right now?
Let me add it. Sorry, I saw someone in the backstage would do it. Wait, let me remove mine, and I can add. Okay. No. All right, okay. Now it's on.
Right now, excellent. So I will just create a little bit introduction, just what I'm doing here. So I work as a machine learning expert, and I have a lot of algorithms that I use in trading. Of course, to predict the right price, it's impossible. It's very hard, but I can always ask some question. For example, will my price be above simple moving average 50 on a 1 hour chart? And I can create classification model, yes or no, and make some prediction model 75-80% just to guess what will happen in the future. So I have a lot of that algorithms. It's just confidence for me, nothing special. And this is the left black box that you see. I have some classification models there. They just stay there and give me some kind of clues, maybe about the market and everything. For example, one classification model just give me a bias. Will we have new 48 hours low or high, new low or new high? So there's answer is no. So it shows that there is a small probability today that we see new big highs or some new lows outside the Monday range. And this is good thing sometimes for me when I have this kind of edge using the machine learning models. On the right screen, you can see the blue box. This blue box is pivot point area. This is something that I created. This is the based on my knowledge in engineering, for example. What I'm doing is I realize there are a lot of formulas how to calculate the pivot point. Majority of traders use a simple formula when we just take high, low, close and divide with 3. However, there are several types of that equations. So what I do, I create a pivot point using the basic formula, And using the others formula, for example, high plus low divided with 2, that distance I put above and below, and I create some biggest pivot point area instead of pivot point price. And I will show you later why is that important, just to explain the lines on the chart. And this red line is my line that calculates the low high during the day and find a half distance from then. Usually we have a bullish trend, price is above the red line. If we have a below this line, it's usually bearish sign, but it's just there to give me some kind of the bias on the chart, nothing special. So for example, today is a typical day how we can exploit the strategy. For example, for British pound dollar on a 30-minute chart, which is a day session. So the first thing that I do, I draw a trend line on a relative strength index indicator. For example, I would just draw a trend line. As you can see, we have a trend line. So what's happened there? During the Asia session, we make some kind of a breakout there. And we started to go up. So price of the British pound dollar is up. And the next thing what I'm doing every single day is I find the price at midnight. Of course, this price at midnight was somewhere here. And what's happened there? Price started to go in bullish move up to the UK opening range when the UK market is open. And what I'm doing here, usually, believe or not, 85% of the time, price, just if the day is bullish, going to the Asia low just during this opening range in the first 30 minutes. And that happens, believe or not, 85% of the time. And right now you can see today we have opening range, and during the UK Open, price went to the Asia low. And here is the moment, because I know what is the Asia low. I wait for that price. Sometimes I put a pending order and I just make a buy order. So I have a triggers. My bearish trend line is broken. We're bullish now. I wait for Asia low. I make a buy order and I put my stop loss usually to be 24 hours low or something like that. Sometimes 5-10 pips below the Asia low, depending on the volatility of the market. And then I wait what will happen. Today we have a really good run, and we went to the Monday high. It was around 1.2940. So I didn't took this trade because I wanted to take them manually. I missed the opportunity and I didn't make a trade. However, this is a typical trade that I have every single day during the month, during the UK open moment. So, so as you can see, usually I open the trade in the first half hour of the London Open. And that trade usually will last a whole session, usually 1-2 hours before the US Open. I will close that trade because the market after 2-3 hours start to go sideways, couple hours, wait for the new pre-market, for the new trend, and every day is like that. Of course, every single rule has some exceptions. This rule, for example, related to the first hour of the day, it's a moment when I do not trade this strategy, is when I have a breakout just in the middle of the US session. Usually when I have a breakout of the US session, this will never occur, so I know that. And that is the moment when I do not do that. And I will show you example. For example, euro dollar is the typical, it's a typical example of that. Maybe today we had some kind of the first hour open. We just go down, went down today on the Asia low and go straight in bullish trend. But what's happened very, very often, when we have a strong bullish trend, very strong bullish trend, price can go above the pivot point area, just touch this upper box, blue box, and continue to go up. And this can happen very, very often. So sometimes I will not touch the Asia low. So I need to monitor the first half hour of the UK Open to decide where I will enter. And usually this blue box just help me to find the right price for that. So usually this is my daily strategy. I repeat this strategy very, very often, every single day. And it's a little bit boring, of course. But like I said, there are not so many triggers. Relative strength index indicator, trend line, this is the one trigger. And another trigger are Asia low, a high, and UK open. So this is the one strategy. So I hope that you like this strategy.
I dig it. It's very cool. So
And
did you do all the programming there in MetaTrader?
Yes, this is for MetaTrader. Yes,
and that's what, C#, right? Or what's the language they use again?
MQL4, MQL4, MQL5. But sometimes I can use the Python and use other programming languages if I need some third-party data, for example. Sometimes I took two kind of data outside the MetaTrader platform. One is the volume profile, like Sam use on futures, because the CFDs don't have this kind of information. And sometimes I'll pull back COT report on daily chart just to have that kind of the column. Sometimes it's good to know for the good risk reward ratio. So this is the some data that I pull out there. And of course, I can enter manually fundamental data. I know that data will not give me some edge in the short term, but if I create the models for the long term, fundamentals can a little bit help there. So this is the something that I use. But I want to tell you, just in my experience, manual trading is the best trading. So much better than expert advisors that can do, because there are a lot of mistakes there. There are a lot of trades, 1, 2, 3 pips, I miss the target, nothing from the trade. If the manual trader do that, manual traders usually will never make mistakes such as that. They will close a trade if they see that there is a consolidation there or something like that. So manual trading is much, much better. Even I use this kind of trading too, but
but like you said, it just helps you with your decision making, or just raising the confidence and stuff. Yeah, absolutely. I mean, there's a time and place for everything, right?
Yes, it's it's like that.
No, absolutely. Cool. I mean, it's very cool that you're able to actually code this stuff. I mean, I hired some coders, developers, to build a tool that basically just makes it easier for me to spot the larger orders clustered up, so I don't have to sit there and kind of, but I don't even use it anymore, just because it was it kept crashing all the time.
Yes, it can be really difficult there. Yes, it's a big problem.
I was, like, I don't know if you ever experienced it, but I was using MT5 and like the chart would stop loading. Like it would, like the candles would stop forming, and I'd be like, "What's going on?" Yeah, and then I'd send it back to them, and they're like, "Okay, I'll do something." And then we got a VPS, and we had a whole server just running it, and I was like, "This is a waste of time now." Like, I was like, for its one little task that it had to do, it was like months of just...
You had the problem with buffers in code. I have all the time, that kind of problem, and programmers usually cannot fix that. I have one programmer. He's in my team. Last 15 years we worked together, and he's genius. He's a really genius. And only problem that I have in my team, I have 2 Russian programmers and 2 programmers from Ukraine.
Okay.
And last 2 years it was very difficult for a lot of things. So, yes.
I can imagine. But yeah, I mean, it is pretty cool. The fact that you can do it, and if it's working well, I mean, that's awesome. That's awesome, man. I couldn't even get mine to just run without frustrating me. So I think with mine it was hard because I was trying to pull the CME data into MT5, and that's where it got really complicated.
It's very complicated.
Because it wasn't like plugged in to the broker, and then I was trying to execute on the CFD broker. I was trying to, like, I don't know, mix so many things together, and it just wasn't working. So it just kept crashing, and I gave up.
Yes, it's the right decision. So on the end, the manual trading, the preparation that I'm doing every single day, I think it's a crucial for any trader. And for example, this strategy that I just showed here, that I use very often, any trader can apply. So it's not based on the nothing special, nothing fancy, only relative strength index and only price levels. Nothing special there. All these lines and the classification models, just a little bit because of the bias, but nothing special. Nothing special. So simplicity is the key.
Yeah. No, absolutely. I wouldn't agree. I couldn't agree more with that. But yeah, no, really cool. Let's have a look if there's anything going on. We're still in that area, really. It hasn't moved much.
Yeah, very messy. I mean, there's really nothing to look at on my side either. And I think tomorrow, are you on tomorrow as well, Sam? Round about the
I think I'm on
it'll be
first.
after the CPI numbers, I think.
Yeah. But I mean, if I take a trade today off camera, I will be showing it tomorrow on camera, if that makes sense.
Yeah.
So either way, you'll see it if I do take something. I should do. I can't imagine there won't be anything. It's just ranging a bit.
Yeah, I mean, you could have. There's now fair value gaps all over the show. It's you would have got caught up here pretty badly.
Yeah, absolutely.
It was a good decision staying out. That's for sure.
Yeah.
But
I couldn't give a overall bias. I mean, obviously my bias is still going to be more bearish just because of what happened previously. But it is. I mean, I don't know. I mean, the market can be very unpredictable. I'm not very good at predicting the long term.
I'm generally all right with that. Obviously, it's just a mess and fuss in between.
Yeah. I'm really not good at kind of getting the long term. Because in my head, I'm like, well, that could happen, but this could also happen. That could happen. Like, there's so many scenarios of what could happen. I don't like getting the idea that fixed in my head. Like, oh, it's going to go down today, or it's going to go up, and then miss a really good opportunity because I'm fixated that it has to go in that direction. But yeah, I'm not very good long term.
There is one thing that I just saw. It was a few weeks ago about Larry Williams. He developed a lot of indicators for all these platforms that we use, and he created some kind of the indicator for long-term prediction. And in November month, I watched the YouTube video, and he was talking about the NASDAQ, about S&P 500, and Bitcoin, about a strong push down in the March month. And I said myself, this is crazy. It's March. For me, it was too long, and on the end, everything that he said in that podcast and YouTube video, everything was true. And I think that he really used some kind of waves or Elliott waves or something for long-term prediction, and it's really interesting.
What was his name? Jerome Powell, or how is he able to predict this?
No, I don't know how, but he's using something. I don't know. I just need to see. It's not accurate about maybe price, but only that some strong bearish move or strong bullish move will happen. This was insane for me.
Wow.
Yeah, I've got something here from what's a guy from NeoWave. So he takes a little bit of a different look at Elliott wave analysis. And for the bigger picture, obviously, this is not for day trading, but I've been following him for jeepers, probably 8 years. I've got a free newsletter, so it's not a paid service, not something I'm trying to push on a channel either. But just his overall look of how he actually calls, expectations, it's just absolutely insane. So I've actually got a PDF here open. Maybe I can share this tab with you guys. There we go. Can you see that?
Yes.
So I've been sort of following him here since, when was it? 1990, not 1990, 2019, around about there.
Yeah.
And he's been saying, and this came out in the beginning or end of Feb, watch out for a potential topping formation. And the things are going to be getting really volatile. I think the actual title of his email was where share this PDF. It's like, get ready for a wild ride. So very interesting how, some of these disciplines can actually do this. I think there's actually competition that you can be, do forecasting with. And I think he's been walking away with this for years and years and years. So according to him, he reckons that if you read this right on the bottom side, October 23, that low should not be broken in 50 years, according to his calculations. Whether that obviously happens or not, but what happens in between, I think he definitely called it pretty well, to be honest.
That's incredible. I mean,
and this is nothing to do with Elliott wave analysis. It's derived sort of off that, and he reckons Elliott wave, the classic Elliott wave analysis, just doesn't work anymore that nicely in the market. So what he calls neo wave, developed this type of analysis. And good luck. Maybe Igor, you're much smarter than both me and Sam, I think. So this is something maybe you can go study. I'm too old to want to study. New things that's going to take me years to try to understand.
I think this is the base on the simplex methodology, I think, into project management, because he's using these lines and lines intersections to make conclusions. And this can be very, very powerful, because when we have a trend 5 years, 6 years, 7 years strong trend line, we can assume that we will touch that trend line and go in another direction and etc. So this way of the prediction maybe creates some waves. It's very interesting. So
you see these green boxes he's got on there too. That's sort of like a timing element he's using as well, which has also been quite very interesting, to be honest. But anyway, I thought I'll just share that with you guys. Well, nothing's really happening on the charts.
It's super interesting, though.
Yes,
people can do stuff like that. I mean, but this is it. I mean, you got to find what works for you, right? Some people, I found one little sliver of the market, one tiny kind of like strategy or setup that works very well for me, and I just repeat it. And everyone, I feel like to a certain degree, that's what most traders do, right? We find one kind of area that works. We know what we're looking for. We become experts in one tiny bit of it. And then you just rinse and repeat. That's really all you need,
Yeah.
That saying, trying to be a jack of all trades sort of thing,
Yeah, absolutely. Just become an expert in one tiny bit. Don't try and do everything at once. Because then you just kind of become okay about everything, but you never excel in one area. Awesome. Have a look at the chart. I haven't had a look in a while. We're finally breaking below that area now. We're starting to see a bit of movement. All right, I'll load up the charts. Let's get this going. Give the viewers something to look at. Okay, charts are up. Yeah, we're finally breaking through that area. Now it's no more like a gap in volume. It's actually just a nice little... Sorry, some other program gives me a little bell noise, and it deafens me in my headphones. But yeah, I'll be I'll be interested if it gets down here. I think the next area will really be around this yellow box, and then we might see another push up again, and potentially just a bear market for however long. I have no idea, but eventually it has to stop. There has to be a bottom to it. I hope it's soon, because I would love to be able to confidently buy and sell. Because if there's nothing to the left of me, I find it very hard, right?
Yeah.
Like if I drop to like the 4 hour, there's nothing for ages. You know, we're going back and back, and then eventually, September last year, we're seeing something, but we haven't got like a proper low, like a actual quite structural low right down here, so it could just keep going down. Well, I mean, we're far off it still, so it might be another week, 2 weeks, who knows. But if that's the case, then it's just going to be a bit more cautious, a bit more boring as a market. I mean, on the longer term, like the 4 hour chart, it's just a very steep, clear downtrend. I mean, it's almost perfect if you look at it. It's almost picture perfect. But I'm sure there's a lot of swing traders who are loving this right now. If they you know, trade each leg. Yeah, I'm sure they're loving this, because this is just no pushback. It's just, it drops, kind of slows down a bit, and then drops, slows down a bit. There's no it's beautiful if you're a swing trader. It's picture perfect for them, I would say. But yeah, I think I'm pretty sure it's going to get down here at some point. We might see at the end of the day a bit of a push up. I hope there's a bit of a retracement somewhere. Now that we've pushed a bit lower down and we've got this point of control here where the heavy volume is, if it comes back, there could be a short position. If we start coming back into these areas here, then I could have a short trade. But it has to be a bit of a pullback, which might occur now in the next hour or two. That would be great, because we've kind of, any buyers now have given up. They're not going to be still trying to buy the market. They've given up. Sellers who did sell, they're probably taking profit around these lows here. Naturally, you're going to see a lot of sellers exiting the markets around this area. So we might get a pullback as it just sort of, drifts up a bit. And then we got new sellers jumping in where there was heavy volume again on the footprint. And we could, get another little leg going, and I could jump in for a short trade. So that's the next picture I'm painting in my head. Will it be in this live session? I highly doubt it, but you never know. Who knows? But yeah, we've got a ton of sellers coming in. I mean, this is just disgusting from the sell side. It's just crazy amounts of volume. The sellers are they mean business. So it should be interesting. So I'm pretty sure. Yeah, I only want to be selling this market. I don't want to be buying in any way, shape, or form right now. But that's pretty much it from my end. I'm just gonna wait. I'm probably gonna set.
Sam, I think you got some questions that came in there.
Okay. Let me have a look. Question for Sam. I think you said you'll almost never hit your stop loss. I'm sort of similar. I will try and close trades if it looks like it's going against me. Yep. But I also tend to move my stop loss into profit, and I feel like I hold too long in the wrong direction and get out too early in the right direction. So I'm over all loss when I do that. When I'm like, okay, I'm just going to hold my trades and I take way bigger losses, I just took out my day and yesterday profits. And okay, got you. Yeah, no, absolutely. Look, my stop loss is there just in case my internet cuts out and I can't manage my trade, for example, right? Like it's there just as a last resort safety net to get me out if something terrible happens. But I never really have it as like, okay, I'm just going to allow my stop loss to get hit, because, for example, say we shorted this market when the news came out, right? I mean, say there was no news today and I decided to short the market when I saw these buyers leave, right? And I got into a trade like here, yeah? And I would have had my stop probably, around like somewhere with structure, right? Probably above this black box here, because I knew that was an area of rejection, right? Low volume, right? And then I would have had my take profit, back down to this low down here. So that would have been kind of the trade I initially would have set up, right? About a 1 to 2, 1.19. So basically 1 to 2 risk reward, right? Now, say as the market started pushing down, okay, and I start seeing this volume come in and all these sellers, there is no way I'm gonna ever allow my stop to get hit, right? Even before that, like, I'm going to be interested in getting out the market if we start breaking above those heavy sellers, right? Because if we start breaking above those heavy sellers and those sellers are struggling to, like, not immediately above, because it can still dip out, but if I start seeing those sellers exiting, getting out of the market against them, I'm also getting out too. So I could potentially exit around this area here rather than let it hit my stop loss, right? But say we're moving now into profit, which we did, and I see more sellers come in. I am now marking out areas where, like, here would be an obvious area. Here would be another obvious area. Same idea. If we start pushing above them and I see other sellers now exiting the market, and that will show up as heavy buying, I'm too getting out, right? And again, we got another area here, right, where you can see more sellers are entering. So if we get above now this black line here, and the same thing happens, and I start seeing them exiting, I'm also exiting. So I'm basically moving my stop along with where the heavy volume is, where the other sellers are, right? It's not so much like I'll move it to break even or anything like that, because break even could be in a good or bad place. It's hard to tell, right? You don't know. So I'm really managing the trade as the volume comes in. So I would still be in this trade. It will look good. Would be nearly at my take profit, and that would be pretty much it, right? And I would also get out if I see, again, a lot of sellers exiting, right? If I see a lot of sellers exiting, I'm getting out the market too. Again, we're seeing more sellers now pushing the market down, 900, another 1,000, another 900. That could be another area where if we start pushing above there, and we're seeing heavy buying occur, and I say buying because it's not new buyers, it's sellers exiting, I'm getting out too. I'm just going to follow the lead of whatever the other sellers are doing, essentially, the other big sellers. And these aren't just like, random retail traders. These are big institutions who are placing these kind of values, right? So I'd rather copy them in a weird way, right? Take their lead, let them do all the thinking. They've got much higher, much more knowledge than I do, and got much better tools than I do. So I'll let them do the reasoning, and I'll just copy what they're doing. Essentially, I'm just collecting crumbs that are dropping off them. That's all I'm doing. But yeah, my stop loss will always be, and I don't move my stop loss, so to speak. I'm manually, I'll exit myself. But yeah, like I said, it will be within the volume. And that would be pretty much the trade. Like, this trade would have been beautiful, to be fair. It worked really nicely. It's just a shame the news coincided exactly with the setup. But yeah, you got to stick to your rules. No news trading. It happens, right? You just got to wait for the next opportunity. And that's basically what it is. But I hope that kind of answers your question, Robert. Where are we now? So we've got about 7. No, we don't have 7 minutes. We've got about 20 minutes. Why does it say? Not entirely sure why the live counter is a bit different to my time, but yeah.
6 minutes.
Oh, yes, it is 6 minutes. We didn't start at. Sorry, my bad. I thought we started at 1 p.m. UK time. We started at 15 past, didn't we?
Yeah.
I'm not very good with time. Time confuses me now, Jake.
Well, it confuses me when they move the time around.
Yeah.
I'm always going like, what time is it in South Africa then?
Yesterday really caught me off guard. I log in and I realized the market's been open for an hour, and I was like, why didn't I? Yeah, it happens. What can you do? You forget these things. It's normal. So yeah, yesterday sadly there was no trade, for me at least. I mean, there would have been if I got onto the charts at the right time, but that's my fault. More footprint awesomeness, that will definitely help. Absolutely, absolutely. If the footprint, like I said, try read it as a story, Robert. Try not to ignore all the small numbers when you're seeing 100, 200. Just ignore it. It really has no impact in the market, right? You're looking for big numbers, in certain areas, right? So, you're only looking for clusters of big numbers, like that, for example, right there. 2,000, 1,000, 1,000. Beautiful. That's just clear institutional activity. The little numbers like 200 here, the 100, I'm not interested. It has no impact in the market, really, So 1,000 for the S&P 500 is kind of like my cutoff point. Like, that's where I take notice. Obviously, if it's like 980, it's pretty much the same, right? That's 1,000. But within, I'm looking again, 900, 1,800, kind of big numbers, right? So again, another little cluster of buying happening. Selling happening. And it just keeps dropping down and down and down until the next area of interest, which I believe is around here. And then we're going to eventually see those sellers taking profit. They'll take profit soon. It wouldn't be that much longer. And when they do, it kind of resets the market. We'll start going sideways a bit. And potentially buyers might want to enter and push the market up.
Yeah.
Or sellers might enter again, start pushing it down even more. Anything could happen, right? But once it resets and the people who are in control of the market get out, there's an opportunity again for us to kind of, something could happen, right? So once the move has happened, there's no point jumping in. Wait for it to reset, essentially. Wait for those sellers to get out the market. It will, two things could happen now, right? Sellers could get out the market here and it will start consolidating a bit, could just go sideways. And then buyers might get brave and the sellers are just not interested in pushing the market down anymore. They've made their money, they're happy. And the market could start drifting up as a retracement until we get to one of these areas and then it pushes back down again. Or it could very easily just consolidate and just continue going down again if sellers are getting particularly greedy, right? It can happen. So two things can happen. Ideally, I like the pullback. I would want the pullback. But now all I'm doing is waiting for those sellers to stop being greedy and take their money, basically. Take some profit, get out the market.
Yeah.
Let's reset it, basically, so I can have an opportunity to potentially jump in. That's pretty much it. He goes, I sort of recently changed my strategy and it's working out okay. I mark out the previous day's highs and lows and the first 5-minute candle. It started going down to yesterday's low, so I shorted. I got out way too early on one and held longer on the other. Yeah, absolutely. I mean, Richard, that's kind of what you do as well, right? You mark out the previous day's high and lows. Use that as...
even the overnight session highs and lows as well. If the market's approaching them. If it's been if there's a strong up or down trend, then you'll have to look left historically.
Yeah.
There's some pretty obvious highs and lows structure and see what happens if price breaks that,
Yeah. And then
there's a lot of times you'll get double tops, double bottoms, those sort of things, so not necessarily that price will break it either. So it could be a good sort of area to target. I quite like if I do target a high or a low, place it a few pips above or below the actual break, Sometimes even the candle's high or low, depending what direction you're going, rather than the wick.
Oh, absolutely. And just to point out, here, we're starting to see big buy numbers come in. And like I said, that's not new buyers entering. That's these sellers now slowly taking profit, right? They're getting out the money. Getting out the market with some money in their pocket near these lows. Makes complete logical sense. That's literally all you're seeing. The people who shorted it, they're now taking their money and they're, having a great day.
One question, Sam. Just about indicator in trading view, this volume footprint, is it some
Yes.
special your indicator or some other?
No. Trading View recently. I've only switched to Trading View recently. It's under the type of charting. You need the premium Trading View to
Okay.
view
Yeah.
it. But if you go to the different types of charts, at the
Okay.
bottom
And
they have volume
volume
footprint.
footprint. Yes.
Yeah. But the accurate data only works with the futures, obviously, and
Of course.
you need to subscribe to the CME data feed as well. Yeah. Otherwise, I think it just uses tick data, which is questionable. Basically, I wouldn't base decisions too much on tick volume, but especially for footprint stuff, like it will be a bit off. Yeah, but yeah, no. Trading View only not too long ago. I think maybe I want to say maybe under a year now. They finally gave you the footprint, which is awesome. Otherwise, before I was using other I'm not going to name them, but other platforms, and believe me, they were difficult to use, to say the least. But I think we've hit time, by the way. 1 hour 30, yes.
Sounds
All right.
Yeah.
It's time. We're going to have a 15-minute break, and then we are joined by, bear with me as I look at the
Paul and Jannie.
Yes, Paul and Jannie today. So everybody watching, Robert as well, thank you for joining. You're always great. You always have great questions. And yeah, guys, in about 15 minutes, we're off now. That's it from me, Richard, and Igor as well. But join in about 15 minutes for Paul and Jannie, which is always interesting too. So thanks you everyone for watching. We'll see you
Robert, as well.
very soon.
Thank you, guys.
Thanks, Richard.
Cheers, Igor.
Thanks, Igor.
Nice seeing you again. See you soon. Cheers, Sam.
Take care. Cheers.
Bye-bye.
Bye.
Paul.
Jannie, how are you doing? Nice
Very
to see
well,
you so
thanks. How
soon
are you?
again.
Yeah,
Okay.
yeah, likewise. Always nice to see you, man. Welcome to everyone to the second session. Yeah, like I have placed, let me just share my screen. I have managed to place a trade today.
All right, cool. Let's see it.
But because it was in the previous session, I decided to record it. So I did record it, so I'm going to play the recording. But there's one issue. When I played the video back, there's no sound. I'm like, oh, you've got to be kidding me. So, but it's fine. I mean, I'll still, you'll see the trade, and I could just.
Oh, you mean you were commenting on it? You were commenting.
I was yeah, because I was like, as I was recording the trade, obviously I'm talking you through exactly what I'm looking at, what I'm seeing, and the reason for the trade. And then when I looked at the recording, there was no sound. I'm like, oh, okay. Well,
you're going to have to do it live, Jannie. You're going to have to do it live on the spot.
Yeah, I'm going to give you my commentary. So let me just pull up that video. Okay, there we go. Can you see it?
Yeah.
Okay, so let's play the video. Okay, so first of all, what I mentioned here, let me just pause the video so I can explain to you. I'm going to have to go back here a little bit. You'll see I point my cursor there. And what I'm saying there is like, even though there's a breakout here, now before I carry on, look at the other time frames. Look at the 15-minute time frame. It's breaking through support there on the 15-minute. On the half an hour, you had a massive, well, you can call that an engulfing candle to the lower end. And on the 1 hour, you have the sideways consolidation and then this move to the lower end. So, but these two time frames is enough for me to say, okay, I definitely want to go short here. But the reason why I didn't take this breakout here is because, I don't know if you can remember in our previous sessions together, is when I look for, or when I see an entry of potential opportunity, I always have to identify where my potential stop loss can be. Yeah. And my stop loss is usually at the previous swing, the previous pivot. And that's what I'm pointing out here. The pivot is really high up. The breakout is here. My profit target is the previous day's low. That's this line here. So I would not take this trade because the risk reward ratio is completely skewed. You take a few of those, you win half, you lose half, you're not going to be in a good position. Yeah. So that's the reason why I didn't take that trade. So let me just continue there. That's what I said. Probably said it better there. Okay, so that's the breakout, and that's why I don't take the trade. And there's the take profit area. That's what I'm trying to explain there. So let's just see. So that is the pullback. And also in addition to that, let me just pause the video here. So in addition to this pullback, this candle that pushes back up is also the beginning of a new time frame on the 15-minute as well as the half an hour time frame. Okay. So usually, like on most candles, you'll get that upper wick. Like even if you were really bearish, like I got that break, I'm definitely bearish. But this is a new candle, so it's pushing to the upside, and now this is now forming the pivot I'm looking for, which is also the upper end of the wick. Does that make sense?
It does.
Yeah. So you'll get that wick, and then so now I'm waiting for it to break the support again, and now I'll get a much clearer risk level, and the risk reward ratio will now make sense. Now it makes sense to take the trade. Okay, so let's just play the video again. Okay, so now I'm waiting for basically just for that candle to close. There's about, the video is 5 minutes long, and I pause it as well. So be patient, Paul. Okay, there it breaks. It breaks the low of the previous candle. You can see that arrow there. The arrow, all the arrow does is it just tells me that it closed below the support level. Now I'm pointing out, you see, that's a much better place to play, or much better area to place your risk. And if you now look at the potential take profit, which is the previous day's low, that's a trade that makes sense. And again, just look at the 15-minute and the half an hour. This is an upper wick. And the probability for this to go lower and give you a bearish body is very, very high. And the take profit area is at a very realistic level, which is the previous day's low. Does that all make sense? You can just stop me.
That's fantastic.
So yeah, I must admit I got a little bit nervous when that thing pushed up, but it's the 1 minute time frame. But everything is in my favor. Everything is in my favor on multiple time frames. Right.
That's the key. Always the key.
Yeah. So the probability for this trade to work out, as we spoke about in previous sessions, it's always about, it's all about stacking probability. Oh, now I'm on the daily. Okay, so the daily, that's the 200 EMA. It broke the 200. We'll talk about that in a bit. It broke the 200 EMA. That's a level that I identified as the previous support, or as one of the potential support areas. I do expect the NASDAQ to go much lower. Obviously not today or just in one session, but that is the next support level. It very clearly broke that level. All right, I'm back to the video. Oh, what am I doing here? Oh, I just paused. Oh, there. Okay. So there we get a nice push. But now on the 1 minute time frame, you can see that these previous lows, they also serve as support level. So you're clearly in a bit of a range here. But there's no concern for, oh, is this going to work? Is it not going to work? You've already made your decision. You've looked at the longer term time frames. Your bias is very clear. Your stop loss is very clear. The reason for entry is very clear. It breaks support. There's no guessing here. The reason for the trade is very, very clear. And now on the 15 minute, you can see you're breaking the open of the candle. Okay, it's pushing back up a little, but the probability for this now to go lower is extremely high. Okay, That's the upper wick. So how long was this video? It was only 2 minutes long. So you can see if you count from how long I've been in the trade so far, this breakout when it closed below the support level, that's where I entered. So 1, 2, only the 3rd minute. It's really short compared to, the monthly time frame. But okay, so that's I recorded that little push to the upside, and this is also where I said, even though it struggled to kind of break lower, everything else is in our favor. Did you see the mouse code like that? Yeah, everything else is in our favor. The probability is definitely stacked in our favor. Okay, so now there's only a minute left, so there it starts to push a bit lower. There I just point out the previous lows. And the take profit is so now we're getting a nice push. Right? Now we're getting that nice little push.
Yeah.
Yeah. So now we're getting the nice push, and but still not there. 46 seconds, so it's going to be in the next candle. Okay, so pretty close. The 2 standard deviation is just below yesterday's low. The 2 standard deviation is also a support level.
So and you got that low volume node as well.
Yep. Yeah.
It's very helpful.
Yeah. This is the point of control.
Yeah.
So you'll see it's going to touch there any minute now, and that was the take profit area. That's a very decent risk reward ratio. That's about just over 1 to 2.
Yeah. Good trade.
Okay, so 4, 3, 2, 1. That's it. So that's the trade I took. So, I mean, in the live sessions, I don't always get the opportunity to place live trades, but that doesn't mean opportunities exist outside of my trading session. So, if I record them and I can talk people through it, then hopefully that will help.
No, it's very, very helpful. I was spending time today, I had a couple of students earlier today, and I was spending time with these 4 quadrants. Maybe we can have a look at that a bit later, just the rationale, because it's extremely helpful for all aspects of TA, being able to see multiple time frames at a glance. And it does give you the edge. It does give you an edge, for sure.
Oh, for sure. I mean, I just want to point out now, after the fact of this is where I took profit right on yesterday's low, and it did find support there. And now it's bouncing back off. Okay. Yeah. Now, will I look for an opportunity right now to short? No, because look at the other time frames. Nothing is lining up. It's very different to the trade I took, where you got that real strong rejection of the resistance area. You had this real strong push to the lower end, this engulfing candle of half an hour, which that's not existing right now. It's completely different right now. This is pulling straight back up. The 1 minute is a mess. It's all over the place. But the longer time frames is not giving me anything clear. I want to see at least something lining up on at least 2 of the 3 time frames here on the longer time frames. So if I can get 2 of the 3 to line up, and then I get my confirmation on the 1 minute. Now, obviously, for most other people, it will not be the 1 minute time frame. It may be the 15-minute time frame. And then they look at perhaps the 1 hour, the 4 hour, and the daily, or they look at the 1 hour as their trigger time frame, and then look at longer time frames like the daily, the weekly, and the monthly, for example. It's like everybody's different in terms of which time frame works best for them. But the concept is exactly the same. The time frame, it doesn't really matter that much. Does that make sense? It's like you just need to kind of pick what works for you. What do you prefer? Like, do you prefer to? Does the 1 minute scare you? No problem. Go to a longer time frame. But the concept stays exactly the same. Stacking probabilities. Look for multiple time frame confirmations, and then have a very good reason for your entry. This reason is pretty straightforward. It broke support, okay, and giving me a nice little pivot for risk, area of risk, and then the take profit is also very clear. So, yeah, but as you can see right now, we're not getting that. We're not getting any of that. The 15-minute is a mess now. We're now back into this range, and the half an hour as well.
This is I think probably the most important point you made, and it's a mistake which I think we've probably all made. I was thinking about the same thing when I was setting up that Litecoin short trade on Friday, which I didn't end up getting into. But once the move had been made, Bitcoin, when the idea of the move for my short trade with Litecoin was similar sort of idea. We're in the new range. We've tested the upper range. Bitcoin has done the same. It's come down into a lower range, and at the upper side of it. So the premise of the trade is that Bitcoins are going to come down. That's going to pull Litecoin down, and the same with the money flow. But once that trade has been completed, that move had been completed, we got a bounce, and then my buy entry, the top of exactly where I bought in again, the price action was there again, but Bitcoin was no longer at the top of its range. It was in no man's land in the middle, which means that even though on my price chart on Litecoin, I could potentially do another short trade in the exact same way. And in fact, in that instance, it would have worked out, but I wouldn't have thought of entering it because the premise and the concept, the weather was different. And this is something beginner traders they make this mistake, right? I've done it. I don't know about you, where you've missed an opportunity because it's like the first touch. Say, for example, you've got the price action descending towards a support line, which it hasn't been at for, say, a year. There's going to be a lot of buyers which are going to turn up because it's the first touch, even if you've got a lot of bearish momentum. But then the second touch is more risky, arguably, because you've exhausted some of the buyers. And therefore, so the first touch is important, right? And that's the one you want to capture in a bearish market. So being aware that the conditions have changed, even if the price movement might be mirroring, is a great point. It's the thing everyone should take on board.
Yeah, for sure. I mean, I also wanted to show you, if you don't mind. I'm sorry, I'll let you take over in a minute. But I just wanted to show you the daily time frame. You could see that in the video where I was just pointing out where it broke below the 200 EMA. We all know that's a significant support level, or significant level in general. It bounced off quite nicely, but now we definitely broke it. Now, when you're in this kind of free fall, this is like, I think this is also what you mentioned earlier about no man's land. This to me is no man's land.
Agreed.
Because you are not close to any level here. Okay, from this point, I would probably, but this can do anything. This can range. It can pull back to the 200 EMA. It can maybe pull back and not all the way to the 200 EMA. I mean, it's a very tricky place to try to come up with some sort of trading plan. But the buyers for me is definitely short because of, we've broke that. But the smaller time frames, that is where I will make my decisions. The smaller time frames needs to agree with what I see on the longer time frames. It needs to all I agree. It's almost like it's like a democracy, a bit of a democracy going on, right? We all agree, and then the probability increases because that's what it's all about. That's the first thing. And the second thing is, like we spoke yesterday about the RSI. So I just added that onto my chart to see, because it doesn't really work on the smaller time frames. It's just, I mean, things like divergences and so on is going to be extremely difficult to spot on the 1 minute time frame. It just goes too quick. Every minute there's a new candle. So you know, I think it's very likely to miss that. But on the daily, if you look over here, you know, RSI making a lower high and price making a higher high. So that's a divergence. And that also happened to be the top. Do you see that?
Yeah.
So if you are a longer term time frame trader and you don't like the 1 minute or the 5 minute, this would have been, you know, this is a really good indication. And you combine that with price action, you get those two dojis, bearish dojis, and then you can just simply wait for a break below the lowest point of the two dojis. That would be a good entry, and the stop loss just right above the highest point there, and you'll take profit. I mean, maybe not necessarily the 200 EMA, but you can definitely target this low here.
Yeah.
You know,
I mean, that's the thing. It's like your targets. We have to set our targets based on what's going on in the market and the trade. And obviously, if there's uncertainty, then obviously, you know, you're doing intraday trades and that sort of stuff. But in my world, you know, whatever's going on in the market, and you know, it determines where we take our profits. If we've got a bull market, which is, you know, Bitcoin's putting in all new highs, the whole market's going, the money flows in a downtrend, then it's you can do a medium-term hold and just set, you know, the next 3 or 4 resistance levels above as your target. But when things are like they are now, it's going to be very short targets, not short or long, but very tight targets, as well as, of course, a tight stop.
Yeah,
the key is adapting.
Absolutely. That's so key. You need to adapt to the market conditions. I think at the moment where we are with the markets in general is there's definitely so much uncertainty. There's so much uncertainty. And regarding the tariffs, I think definitely plays a big role. And things like, well, if you look at the big players, like let's take Warren Buffett, for example, he's sitting on cash. Warren Buffett is sitting on cash. I don't know if you know this, but it was very recently, I think it was just last week, maybe the week before, he got into cash. Now, just remember, if you go into cash, you have to pay taxes, and you also expose your money to inflation. So your money is depreciating. Typically what investors do, like when the markets are not looking really good, they will maybe you know, get into lower volatile assets, lower risk, and not exactly the best returns. But the aim is just to at least make inflation so that you maintain the value of your portfolio. So he's opted out of all of that. Like, he's in cash, so he's exposing himself, first of all, paying taxes, and also I can't remember the exact figure he paid, but it was a number, you know, quite a few billion. And then also exposing himself to the inflation. So, you know, and he's happy to do that. He's happy. He thinks that is a better option than to be in the market right now. Now, I think that says a lot, and, you know, we need to pay attention to that. And if you combine those things, and if you look at what people are doing, and you combine it with the technicals, like over here, price action breaking the 200 EMA, and you can see there's a very clear break. This is a very strong break, by the way. Yeah. Then I do think that, you know, we may be heading much lower on, well, definitely on the indices, especially the NASDAQ.
What do you, I mean, just that the whole, I mean, it would be interesting to, I'd like to ask Buffett this question. I mean, you know, is he actually happy, or is he just, he's sitting in a lifeboat off the Titanic, and he's like, yeah, I'm glad I'm alive, but I'm still in this boat, right? This tiny little boat. I mean,
I mean, you really need to, like, if you watch some of his interviews, like very recent interviews, he's very concerned about the tariffs. He says it's an act of war. That's what he says. And it's not going to have a good impact on the markets. So that's why I say it's probably that. So that's why I also mentioned about the uncertainty. But I mean, if you look at the chart, this is not uncertainty. This is a sell-off.
Yeah.
This is not, this is uncertainty. Right, yeah. Right, yeah. That's uncertainty. This is pretty much people making their minds up.
Yeah, it's just like what we mentioned on that Ethereum chart yesterday. It's just like taking a dive. right? It's just fear, just unbridled fear. And this is it's a sort of thing which happens when precedent is ignored, in terms of how, behavior. Like we all, the world as monetary systems and economies is, of course, capitalism is an imperfect being, and it's meshed with other approaches and all that kind of stuff. And it's never perfect, but it's always been a balancing act. And one of the most, you can look at a, I'm trying not to be specific because I don't want to get political, but let's say you have a centrist who is all about stability and the status quo and making well thought out movements, doing, assigning committees to research, cost cutting and all that kind of stuff, right? And how we can, revising trade deals or looking for new proposals, slow movements, things which, regardless of what you agree with or not, won't impact the market like this at all.
Yeah.
And then you've got people who just like to break things, for whatever reason. And this is what we get. And there's obviously an argument. The argument coming out of Washington, of course, is there's going to be pain when there's any major change, just like if you're gutting your house to decorate it, right? But what people want to see when you're doing that to a house is that you have a plan, right? You know what you're going to do. And the problem is there isn't a plan. And because none of it makes sense, traditionally at least, like you said, it's war, which I agree with. It's why are we doing this? And this is how the market reacts, because there's nothing to grab onto. There's no which lifeboat do you jump onto? It's like we don't know which direction we're going. And this is what happens.
So I think just to add on to everything you said, it does help, and it does pay to pay attention to the big guys. How are they handling this current climate? And quite honestly, all I can see is like people are very cautious, and they're not bullish on anything. To sit on cash and to like deliberately expose yourself to losses, because that's what it means when you sit in cash. It's like you're happy to take that loss. You're happy to take that inflation on your portfolio. You're happy to pay the taxes. Then that means like you're expecting something far worse in the markets. So it's interesting times, very interesting times. But luckily I trade the smaller time frame, so I can still hopefully get some opportunity. But even on the long-term time frames, I mean, I don't think there's. You just need to know your game. But anyway, sorry, Paul. I took like the first 22 minutes. Do you want to like maybe? Share
it's I'm going to be honest with you. I have purposefully ignored a lot of the news today because it's just I feel like being pulled in every direction, and it's messing with my cheese. But I really want this multi-time frame thing. I think before we jump into crypto and get your insights on that, let me just have a conversation about the multi-time frames. Just a little bit of a lesson, perhaps, just for a second, because I had a really good conversation today with one of my students, and we can just follow on from you if I can remember how to operate this computer and share my screen.
Well, let me just stop sharing mine first. Okay, there we go.
Right. Okay. Let me see if I can find it. Now this is right. This is not what I was looking at. Let's see if I can find it. It's going to be one of these again. Just too many charts. Too many charts. I can't even find it. I should have found it before I put it on here.
That's okay.
Yeah, it's not really. Where is it? I'm just so busy today. Let's have a look.
There's a lot of work that went in on like most of those charts.
Oh yeah. You wait and see. What was it we were trading? What was it we were looking at? Man, I think I'm going to come back to that because this is just no one's enjoying watching me flick through charts, right? I'll come back to that. Let me see if I can find just something. No, okay. Yeah, no, this is it. This is it. Thank God I found it. Right. Thank you for everyone's patience. So this is just a random crypto, and this is just for it's nothing to do with this token. It's just to discuss the kind of the multi-time frame approach. So very straightforward. Let's say a trader is looking at the 2 hour, which is this window here, right? Can you see that okay?
Yeah, I can see that. I can see those two little shoes. You put some shoes on for those bottom.
Yeah, those are my
weeks.
double bottom shoes for the 2 hour.
Yeah.
So,
I
and
see
we're
that, yeah.
you can see we're obviously, it is long-term support. Excuse me, that's the 15. So it is kind of, we're approaching the support range. This is the daily on the right. So let's say I'm thinking of a long trade here. Okay, the first thing I need to do is decide where the best place is to get in. So we've obviously got some order blocks here, and obviously we've discussed these, but it's just one kind of signal, and we're trying to figure out where we can begin to scale in. So if we look at this, where the price action is, double bottom, you might think that around here, 167, right bang in the middle, is a good place to enter. We've got a double bottom, we have a reversal pattern. So this might be a good location, ignoring this moving average, which is sweeping down. Okay, it's obviously, we talked about targets. Whatever we do, it's going to be a pretty small movement, right? Just to make sure we're not caught out, right? Maybe a little 10%. But when I'm looking at the daily, I will notice that the order blocks on the daily, of course, are lower down. And one of the key mistakes people make is when they focus on one time frame, is they get stopped out by liquidity hunting on the higher time frames. This happens a lot with a change of structure, a change of character. Before a change of character occurs or after it, you get a change of character, you get like maybe this higher high, and then we come back down again. But looking here, and then we scoop up this liquidity, my buy entry, proposed buy entry at 167.53 is above the order block on the 1 day, like right above it. So knowing that there's a lot more buyers on the higher time frames, at the very least, I'm going to consider putting my buy entry at the bottom of the 2 hour order block at 160, which is essentially at the top of the order block on the daily. So I'm not saying that's what I would do as a trade. The truth is, I'd obviously probably put it down here, 138, which is about in the middle here, right, of an order block, because I'm looking at the range as well and the moving average. But if I didn't have these multiple timeframes available to me at a glance, I might make the mistake of entering at too higher a position, whereas the daily has informed me that maybe there's more downside ahead, and this is where the most buyers are, because obviously we want to be entering with the most buyers, and you don't see where all the buyers are on any chart, but you don't see all of them on just one time frame. So negotiating the process of entry and where you're going to take profits is so much easier when you're looking at these multiple time frames, and you can also, because you can miss something, right?
Yeah, for sure. I mean, that's the reason why I trade like that, because it does make a massive difference. If you, like, I was just looking at that chart and you were looking for a buy entry. I was going to say, I thought you were going to ask me where would I buy, and I'm like, I'm not going to buy, I'll sell. I'll maybe wait for a bounce and then look at the smaller time frames for a short to the break where the buyers are and sell into the buyers. And that would be where do you understand what I mean? So that would, for me, that would be a better play, because you're doing the opposite than what most people are doing. And that doesn't mean you can reverse your position once it does hit that order block and you get some confirmation on a longer time frame, and then you can take the trade to the long end. But that is a second touch. That's a second touch. But it's not. I wouldn't classify that as a double bottom yet. I see that just as a second touch, and that's a clear support level. I don't think. I mean, just based on the actual overall trend and so on, my bias will definitely be short. I will be short, and also the break on is that the daily? Is that the 200 EMA?
Yeah, but obviously this is just a 2 hour.
Okay, yeah, but it's fine. Like the thing is, like the daily 2 hour. I mean, it's fine. The bias on the daily is bearish.
Yeah,
it's bearish. Okay, and that bias is confirmed on your smaller time frames. So if you had if it looked like it was bullish on the 1 hour and the 2 hours bearish and the daily is bearish, like that, it's all over the place. You don't get that confirmation. You don't get that confluence. There's nothing. You can't stack those probabilities. Yeah. So I would. Yeah. Exactly. I would. From that point, me personally, look. We all trade different. Some people will buy that bounce and trade that bounce. Like the chart I showed earlier of yesterday's low, that's where I took profit. It bounced off there. There will be a bunch of other traders who was waiting for that yesterday's low and take a long from that position. That's where I exit my position. You see, so there's no right and wrong answer, but just based on what I see there, if I see the buyers is short, then I just want to get confirmation on the smaller time frames. In terms of, you can look at the EMAs and so on, but then the price action also needs to agree. So I would probably wait for on that 2-hour chart, which is the one on the left-hand bottom corner, right? So if that one bounces back up, then it doesn't necessarily have to go all the way to that top order block. I would then look at the smaller time frames to see if is there anything there that's obvious that lines up with. Does that make sense? So, for example, if I see it's bouncing back up, and now I get like 2 or 3 dojis, that's just for argument's sake. And I can also see on the smaller time frame, like the 1 hour, it's clearly hitting some sort of resistance, and I'm getting a really nice entry. And then even, what's the smallest time frame there? Is that the 15?
Yeah.
Oh, that's the 1 hour. No, the 15. Okay.
So yeah.
And then the 15 will be my trigger. The 15 minute will then be the trigger, and then they all line up.
Yeah.
Not all of them, but at least, as I said, I want to get. So the daily is that's where you get your buys from. On the other 3, you've got 2 daily charts there, or am I missing? Oh no, there's a 15 minute, 2 hour,
1 hour,
1 hour.
1 day.
Yeah. Okay. So I'm gonna, see, mine is slightly different. I have the daily is not on my chart. So I have Have you tried to experiment with a 4-hour time frame? So you have
this isn't a typical multi-time frame setup that I often use. So I typically would have the 15, 30, 1 hour. The 5, 15, 30, and 1 hour, and then I'd have a separate 4 quadrants for the intermediate trend, like the 2 hour, 6 hour, 12 hour. But the reason why I've got it this way is because the conversation at the time was about entrances, and this spread allows me to keep the lower time frame bias whilst having the insight. And the point you made about is a very important point, that you're right, because what makes a double bottom? A double bottom is confirmed when the neckline breaks. So until that happens, everybody is trying to front run the pattern. I mean, that's how the pattern is created, but you have to realize that we've got the beginnings of a reversal pattern. There's no confirmation, especially when we've got the price action behaving like this on the rebound. But for me, the issue is, of course, like I'm thinking of say I'm an intermediate kind of beginner trader. I've just learned about double bottoms. I've seen this kind of pattern. I'm eager for a trade. It's been a terrible week. I really want to try and force it. But because I've got these multiple time frames, I can kind of realize that, you know what, it's coming down more. We've got more selling activity, which then, if you are thinking of a long-term long trade, it puts you in the right place at the very least. And this is, I suppose, the message which we're trying to convey. But yeah, I mean, it's the negotiation, like moving this. Where is my invalidation line? When the trade, what do I get out? This is it. And it's so much easier when you've got multiple quadrants and multiple time frames to analyze, because it's just, you can make better decisions. It's that simple. Added perspective is usually always good.
Yeah, and it's very different to having, like, even if you are aware of the fact that it makes sense to look at multiple time frames, but you have them on 4 different tabs. That's not as effective, because you'll likely just focus on one chart and occasionally flick through to the other ones. But if you can just see them all like you have them on there, it's just in front of you the whole time.
Yeah,
and you're far less likely to make a mistake, because you'll just see it all happening at the same time. It makes a big difference.
Yeah, and I think what I say, ignoring the big TV behind me, in crypto, just having a multiple monitor setup, even just 2 extra monitors, right, with like Bitcoin or the dollar or whatever, right, it will improve your success rate just because you're thinking clearer.
Yeah.
And I'm not suggesting everyone go out and spend, $800 on a couple of new monitors, but if you really are serious about trading, then the multi-time frame approach is part of it. But there's a reason why TradingView has multi-monitor support built in, because it's fundamental. You see the trading floors, you see all of that. And obviously, when people are on the go, we're just stuck with your MacBook or whatever, and that's fine. But, you know, it's the opposite of that is people trading on their phone, which to me is...
I don't understand that. I don't understand. Like you, I don't. I really struggle. I mean, I can't. Maybe I'm just old school. I don't even like to read an article on my phone. Like I want to see it on my computer. I don't know. I'm getting old, I suppose.
And you want it on print. You want it in print.
Trading? Yeah. Yeah.
Like, scroll.
Click through. Yeah, I want to do that. You know, with a cup of coffee. No, no, but trading is that's crazy. Honestly, I don't think you can trade. You can't. You're not taking it seriously if you're trading off your phone. There's just no way, you know. But yeah, I just wanted to. I wanted to say something. Oh no, it's not important. I wanted to show you my chart, what a mess it is, and why it's not a good reason to trade.
We got plenty of time. We'll pick up with Ethereum in a second. Share it. Let's go.
Okay, you can stop your screen.
Yeah, done.
Okay. Okay. Seems to be a couple. Oh, that's pretty quick. Yeah. So just look at the price action compared to half an hour ago or 20 minutes ago when we just finished watching the video when I said it's not a good time to trade now. You can just see, even though you have a bearish candle here on the 15-minute, and this is important, the bearish candle on the 15-minute, but you have a very strong conflict here on the half an hour. Do you see what I mean? As I mentioned earlier, I want to see at least two of them line up, which is what I had with the trade that I recorded. I had this very strong push to the lower end, to the downside, and also rejecting of resistance, breaking through here, and also breaking through support there on the half an hour. I've got two time frames lining up, and then the third time frame giving me that short there. So yeah, at the moment, even though you get a short candle here, you may be tempted to go short. It's just not the probabilities are just much, much lower. So it's just important to, like, when you try to figure out, like, how am I going to trade? You just remind yourself, okay, where are the probabilities? How do I do that? How do I stack probabilities? And again, I know we've mentioned it many, many times, but it is multiple time frame analysis. But beyond that, you want to see, like, you know, you want to see confluence on at least two time frames, maybe two. It can be very simple. In my case, it's very simple. I just want two time frames with candles pointing in the same direction. I mean, it doesn't get any more straightforward than that. And then on the trigger candle, that needs to make sense. It needs to make sense. I'm breaking support, and it's in the same direction of what I can see on the longer time frames. Now, the 1 hour time frame, yeah, I mean, we had that push lower, but it's now ranging again. So if this candle closes like that, it's the rest of the day is pretty. I think I mean, especially if we don't get anything here on the half an hour, on the 15-minute, I don't think this is going to do much. So my deepest condolences to the people doing the third session. Sorry, guys. You're in for a terrible session. But yeah, even on the 1 minute, like, I think that it just looks like the volume and everything is just completely dried up. You're moving sideways on the 1 minute. If you're moving sideways on the 1 minute, then you know there's just nothing going on.
I mean, look, this is, I was saying to one of my students today that the official line, of course, is you need to know when and when not to trade, right? And certainly the current environment this week and over the weekend has been pretty rough, really rough. But if you can, if you are confident enough and you are aware enough that you need to supercharge confluence, you need to supercharge everything you typically do to offset the added risk, then it is kind of trial by fire at the moment. And if you can trade this environment, you can trade anything. So I'm not promoting people to be just attacking the market now, forcing trades. But if you can make sense of any of this and you can pull a few scalp trades out of it, then you'll be able to trade anything perfectly. So just food for thought for beginner traders. Not promoting anything, but obviously it is.
But like, even for like you spoke earlier about adapting to current market conditions. So if you see on the longer time frames, like the daily, if that's your preferred time frame, the daily time frame, and it's really rough, but you can very clearly see that on smaller time frames, you whatever you're looking for on the daily, because I'm a firm believer that you can find any setup, whatever your strategy is, you'll find that setup on any time frame, as long as you just maintain that multiple time frame analysis. So you're not just looking at the one. So you can, if like things are really difficult on the longer time frames, then see if that what you typically would look for in the longer time frames, can you find that on smaller time frames? Which just means your profit potential, or not your profit potential, but the range, the size of the move will obviously be much smaller because you're focusing on smaller time frames. But you are adapting to the current market conditions. You're not getting the ideal big move, like say on Bitcoin, for example, but it's just not setting up at the moment. So you can either sit and do nothing, which there's nothing wrong with, or you can make use of that time and see like, okay, well, this is how I would trade on the daily. Can I find something very similar on smaller time frames? Of course, that means the size of the move will be smaller, but you can still use things like leverage. On smaller time frames, your risk is still controlled. You'll risk exactly the same dollar amount. Maybe risk less if you're not too familiar, or you're a bit nervous and you go, yeah, I'm a bit nervous about these smaller time frames. Trade smaller, trade a demo account.
Yeah.
But you have to expose yourself to different market conditions, and then just learn that skill of adapting to like whatever the market is throwing at you, because it's not always going to be, oh wow, look how beautiful it's bouncing off this order block. It's just not going to happen all the time. You are going to go through the market conditions that we're experiencing right now. So if you can adapt that way, I think that's a very useful skill and something worth practicing.
Yeah, and it flies in the face of a retail mentality, which is, this is the formula I use to trade, this is the percentage decline I use, and they just try and rinse and repeat. And they discover that for that month, maybe they had good returns because their system, their approach worked for those conditions. But then when it changes, they're in trouble because they don't have anything to answer to in their tool belt. And the biggest challenge for me, and remains the biggest challenge for me, is to understand what the next strategy I need to employ is, and to be able to have enough foresight into what's around the corner in order to be prepared for that. Because I used to get into the mentality where it would take me so long to figure out what the market is doing. By the time I was ready to trade, now the next phase of the started. So, everyone's talking about selling, and I'm like, finally, after a month of everyone screaming about selling, I'll be like, okay, great. So it's short trade time, but then the market reverses and now it's long trade. So it is a trick to see what's coming, which is why I'm constantly yapping on about, the dollar, Bitcoin dominance, total 2, all that kind of stuff, because that tells you what's coming next. And obviously right now it's all about, certainly in my space, it's about reversal patterns, but they haven't even started forming yet. So we either try and catch a knife, or we be patient to wait for the pattern we need for confirmation of upwards momentum. And that can be frustrating for beginner traders. And it can lead to FOMO.
Well, it's not more than just FOMO. It leads to overtrading. And what I mean by overtrading is maybe overtrading is not the right word. It leads to taking low probability setups, because he's like, this has been 2 days now. There's been nothing.
Yeah.
Like, what am I doing here? You feel like you got to do something. You have to be in something, so that it's very difficult to adapt your mindset to how trading actually works. It's very, very hard, and it takes time.
And
It's
it's why that, I mean, we haven't really, this isn't really the place for a psychological discussion, but it is.
Let me sit on my couch. Let me sit on my couch.
Everybody.
No. Yeah.
But it is part of the conversation, because if you're, for example, trading to pay rent, you're heading towards disaster. You just are, because you're trapping yourself between your knowledge of what you're supposed to be doing trading, but then your rent is putting you on a time scale which isn't appropriate necessarily. So but people do this because they're like, this is I need this, I haven't got a job, I want to make this or whatever. But it's like, you mustn't approach it that way. So because obviously, like with anything, it's all about diversification. If everything you're doing rests on this trade, like your ability to put petrol in your car or whatever, then that's a mistake, right? It has to be calm, cool, collected, and it needs to be not focused on, it's the whole thing about, you need to approach trading $25 the same way you approach trading $250,000, right? It has to be the same approach. It's not about your returns. It's about, where is the most appropriate take profit price point? If it's 5%, when usually it's 30, then it's 5%. If you need 30, it's irrelevant. It's 5%. That's the trade. That's the chart. That's what it's given us.
I fully agree. Like this, if you put yourself on, if you are in a position where you must make money, I can almost guarantee the exact opposite will happen. That no doubt that's going to lead you to take low probability trades. And once you have, like, your results are opposite of what you're expecting. It's like, I need to make X amount to pay the rent, and now you're down. You're going to start chasing. It's over trading, all of it. It's just like downward spiral, and quickly as well. You'll know yourself. Once you go, it's very difficult to come. Like a drawdown, I mean, you need to trade. People, I mean, drawdowns is any trader should be very, very scared of a drawdown, because it's a horrible place to be in a drawdown, even if it's 10%. Like you think to yourself, I need to make 10% just to get back to it. That's a bit of a hill to climb, So like risk management is crucial. So you need to how can I avoid that at all costs? Well, you better make sure you know exactly what you're looking for. What you're looking at. Like, if I'm wrong, how much am I going to lose? You need to know your stats. Now, I also wanted to touch on backtesting. Backtesting, you're not going to expect that. I am not a fan of backtesting. Yeah, really? You didn't expect? No. Backtesting is good to give you for me, I'm talking about just me. Other people may say, what's he talking about? Of course you have to backtest. Backtesting is good to give you a general idea whether a concept is working or not. Okay? Because that's all I would use backtesting for. It's like, yeah, okay. This is I get that. But it's not the same as live trading. I can almost I can almost guarantee you that if you backtest something for 5 years, a certain strategy, and now you implement it in real time, your results will not look the same. They will not look the same, because it's very different when price unfolds in front of you.
Yes.
It's very, very different. It's not the same as scrolling back on charts. So that's why it's like with backtesting, I mean, it's good to get, am I going to waste my time with this concept or this idea or this strategy? Well, let's do a bit of backtesting. It's got some potential. Okay, it looks great. I've done 5 years or 10 years of backtesting. It looks great. And now you trade it, and it's it's just different, because the charts, as I said, as price unfolds in front of you, if you showed, you showed that, that chart that you dressed up with shoes, right? With the two shoes. Now
I didn't dress it in shoes. Right? That wasn't my intention.
No socks. But anyway, now if you it's very hard to tell at that moment what's going to happen next. But I can guarantee you, if you scroll back and you look at those two little, the two shoes, And you go, yeah, it's obvious. It's obvious. Look, bounces, goes up. You see what I mean? And it's very easy to explain things that way as well. It's like, look, there touches the second touch and it goes up. Do you understand what I mean? Yeah, like it's a double bottom and it goes up. That's backtesting. That is like hindsight kind of easy. I don't know if you've done this, but I know for sure I've done this.
Yeah,
where I go backtesting and I go, like, there are definitely those trades where you go, what would I would have long. I would have gone long. Yeah, and then you mark it as a positive. Like, yeah, that one worked. But really, I know, like in real time, I probably would have been confused. Maybe it'd been a loss. It's like one of those gray areas. You're like, I really don't know how I would have handled this trade. Does that make sense?
No,
So,
completely. I mean, and if you look at, I know some traders who will, and you'll hate this, who trade the RSI, okay, right? So, and now you can backtest oversold conditions, on the RSI, and you can see, well, if I draw my percentage from this point, and this is the gains, but the reality is when you're in the moment and the RSI is oversold, you don't know whether it's going to come up, come down. You don't know, because if you actually properly, in retrospect, you end up cheating when you're analyzing it, right? Because
that's exactly it. That's exactly my point.
Yeah,
and it's just you lie to yourself. You lie to yourself, and you think you're gonna get away with it. Yeah. You think it's not a big deal. It's just me I'm lying to. But while you're doing it, you don't realize you're lying to yourself. But that's why that is the reason. That's just like I just thought I'd bring it up. The backtesting thing. There are some big believers in it, but I just like to especially people people who haven't been trading for a long time. Be careful with backtesting, and just know that backtesting should really just be used to get a rough idea of if a concept has potential. And then from that point, it's about executing that idea. And that's a different ballgame. That is not the same. It's very, very different. It's like watching, I don't know, anything. Watching a UFC fight is like, all right, okay, uppercut, oh, that's easy. And then try to get into a fight. You're probably not going to make it.
Yeah, there's a lot of indicators out there which conveniently give you these buy and sell signals. And then when you look back, it's like, oh God, this is such a great indicator. When it says buy, I buy. And then when it says sell, I sell. But it's when you actually try and do it, there's like a 3-candle lag, right, before it shows up. And you don't realize that when they're selling it to you.
Yes, or the other thing is back painting. So back painting is basically when it shows up 10 candles later, and that is that the reason why that happens is because there's typically a multiple time frame strategy. So, for example, you can have on the conditions maybe on the 15-minute time frame. Stochastics needs to be above say above 20, and on the 1 minute it needs to be above. It needs to break above 80. Does that make sense? So at the time, the conditions are not true, but say over 10 candles, now the condition on the 15-minute time frame meets the criteria of the indicator, and now it points back 10 candles earlier. So that's the reason why. It's the same with repainting. Repainting is just the conditions have been met, and now, say for example, a turning point, and now it makes a new high, and then it turns down. The conditions have been met again, and now it moves the arrow over there. So, like I don't like if there's like buy and sell indicators, it's very, very important that you understand the strategy behind it.
Yeah,
because if you understand the strategy behind it, you'll be able to spot whether whether it's a good entry or not. But this idea of taking every single buy and sell arrow, no, that's not going to work. I don't think so.
No, I mean it's like but you have to incorporate it with other things. You can't just abandon support and
Yes.
resistance levels. But it's like the
Yeah.
MACD we were talking about the other day. It's a lagging indicator, and I've had some strange divergence indicators in the past, and it said like hidden divergence, continuation, and then I'll be like, right, I'm going to get on the exchange, and then it will disappear. What?
Yeah.
Where'd it go?
Yeah. Yes, exactly. But the thing is about, I mean, the traditional indicators, we spoke about this yesterday, I think, like the traditional indicators are really, really, even though they are lagging, they can be extremely helpful. It's just like, it's almost like today's traders or the new generation of traders have completely ditched those indicators away. You don't really find someone looking at RSI or looking at things like Williams percentage R. It's not very often. And I think it's just because of a lack of understanding. And there's not a lot of content out there explaining how to trade it and how to incorporate that into a trading strategy, and also reminding them that the indicator is just an indicator. It's a tool, just like a doctor uses tools to measure your heart rate, or doctors use indicators. You use indicators in most professions. You need indicators. Electricians use indicators to measure the voltage. You need indicators are very, very helpful, but it's just that. It's just an indicator that can help you to guide you. That's the key word, to guide you in terms of, like, maybe stacking probabilities or making better quality decisions. It's not MACD cross to sell, or moving average cross buy. That's not how it works. That's not what it's just. It's a tool.
And using your medical analogy, metaphor, whatever, it's they do multiple things, right, to assess, right?
Yes,
Even if it's obvious, they do multiple things as part of practice and principle, right, to ensure that their diagnosis is the right one. And
exactly.
So I mean, even if you walk in clearly with a bone sticking out of your leg, they're still going to run multiple tests, right?
Is that really a bone sticking out?
Like, was he dizzy? Right? Why did that kind of thing? So, but anyway,
no, you're right. No, but we agree. It's exactly so. I find indicators very, very useful, but I'm just saying that from what I can pick up from the new generation of traders is they believe in pure clean charts, just price action. And I don't think there's anything wrong with that, by the way. Let me just make that very clear. I'm not saying that can't work. I'm pretty sure there are many successful traders who just trade price action, and good on them. But you need looking at multiple time frames, that's an indicator, don't you think? Because if I focus on the 1 minute time frame, I still need the 15-minute, half an hour, and the 1 hour. You can argue that's just price action, but to me, that's an indication of what I can expect on the smaller time frame. So you can argue, maybe is that an indicator? I don't know, but it's a price action indicator. Yeah. But does that make sense? Like, I still need more.
My style probably fits into that kind of category of price action. It's whatever works for, as long as you're following the principles, however you approach the market, it's fine. But if you're doing anything based on just one or two things, it's not enough. It's just not. And you need to expand your approach. But how are we doing? Oh, right, crikey. Shall we have a look at Ethereum? Should we start with Ethereum?
Yeah, sure.
It's pretty much the same story. Right.
Sorry.
Okay. This is Ethereum daily chart, everybody. And
wow.
This is the buy zone. And this is obviously an historical trend line all the way back to, the pandemic crash. Essentially, it started back in March 2020. Now we're here. Now, just the context, Bitcoin has long since broke all-time highs. But the rest of the market, including Ethereum, and this is all-time highs for Bitcoin from the last bull run, we're nowhere close, which is the disparity at the moment between Bitcoin and the rest of the market, which is troublesome. So if we zoom in, and we were saying obviously that this is a good point to maybe start to scale in, but now we do have some divergence, but the problem is what buyers are going to come in underneath this primary trend line just based on this divergence? A few, maybe, but you can see the volume is quite minimal. So we're putting in a bearish retest, and what happens next is going to really determine what happens with Ethereum and the rest of the market, because Ethereum is a good barometer for what's going on in the altcoin market, which is essentially the crypto market. And this is it, just death, right?
Yeah,
just
it's
death.
not good. Well, I see I see that channel that you have drawn just a little bit. If you just go a little bit back on your chart. So that was a nice breakout out of that channel.
This one here.
To the upside. Yeah, that's a nice little breakout there. And then it just found resistance and it just bounced right back down. So sorry, carry on. I was just making an observation.
Oh yeah, and it is. I mean, this is where I was accumulating at this point, right? And then we had this, but what we were expecting, of course, if the rally was going to continue from, this is November launch, okay, we needed to break above. We need to get out of this symmetrical triangle, and now we're on the opposite side, which is just very worrisome. Now, firstly, you know, it's what's going to happen, what needs to happen in order to get the price action back up here, because if we saw this divergence and we were above the primary trend line, then you're going to get more people entering. But because we're below it now, this is a difficult proposition, and the divergence isn't going to probably help. Our best bet is if we can get the price action, just this divergence and the oversold conditions on the daily, because it is oversold just about, is to just get back in here and just sit, just try and sit, right, until we get some clarity. But if we get any more downwards pressure now, we get, say, some crazy announcement, or I don't know, tariffs are announced on Greenland, I don't know, whatever, right?
Yeah.
Then this break, you know, it's going to be very troublesome, because we're in this space which we haven't been for 2 years, and considering this is like supposed to be the beginning of the altcoin bull market, which we were discussing yesterday about the delay, it's worrisome. So we want to hopefully see the best case scenario right now is a quick recovery back into here, and then but maybe just hugging this and then hopefully eventually breaking in, staying in this zone. But I mean, let's have a look at the weekly just briefly. Let's just, I know we're not a big fan of the RSI here, but again, when we've had reversals, talking about back testing, you know, when we've had reversals, it's been when the weekly has been pretty oversold, following a really significant. So that's what we're looking for, and we've still got more downside. There's still a bit of a ways to go, and that's a little bit concerning for a bull market. So it was a great place to start scaling in, but as you can see, if you were scaling in this line, you can get out now at no loss, because we're having this retest, and because it's a slightly ascending line, you might even have a couple of satoshis of profit. So, but that's Ethereum right now, just untradeable. I mean,
very difficult. It's very difficult to make any sense of that chart, to be honest. Do you think there's any correlation? You definitely have more experience than me in the coins. Is there any correlation between the US stock market and I know there's a correlation between, or is it inverse correlation between the US index or the dollar index and Bitcoin, as you've showed before? Do you think there's any correlation between the actual stock market and Bitcoin, or not really?
It has, I think, yeah, I talked about this last week. It has, Bitcoin likes to peg itself to different things throughout its cycles. So for about a year, it was pretty much pegged to the S&P. And then more recently, it's been, the altcoin market certainly has been just all about what the dollar's doing. And obviously with NVIDIA as an example, on the NASDAQ, that is obviously people watch that because of the AI tokens, which are the hot thing for crypto at the moment. So the answer is whenever it decides to, and that is usually about, it's like, what are Bitcoin investors looking for right now? They're going to be looking at the dollar, right? Firstly, and they're going to be looking at policy more than anything. So we're in a very new phase of correlation, but you might notice when there's a recovery, you might notice that Bitcoin starts to follow some of the more traditional markets a bit better, but it just has a history of doing what it essentially, having its phases. Right now, it's been the dollar, but I think we're now migrating to a bit of an unknown territory in terms of what is investors are looking for, and then whatever that is, there are people who are paying attention to it. People with the AI tokens, which are the hot picks for investing this cycle, will be paying attention to Nvidia, and by design then the NASDAQ, of course, because that it impacts that. But we need to just wait and see, because we're in unprecedented times, and looking at everything to get as much info as you can. I mean, right now, there's a lot of people which will start to look at Ethereum compared to BTC, that kind of pairing, and moving away from dollar pairings, which is more the origins of the altcoin market, because originally most of the trading pairs was with Bitcoin, and it was a different negotiation, because obviously when Bitcoin is going down, if you find an altcoin which is hot, then that's how you make your money, and that's how I was trading. But I wish I had a solid answer right now.
Yeah, look, I mean, I can just look at the chart. You don't have to do much more explanation or explaining than that. That's for sure. That's a very difficult chart to trade. But what is the? Do you perhaps have the dollar index open, or?
Yeah. Where is it? Again, it's hidden. There we go. So
that's the heading logo, right?
Crypto investors will want this for sure, right? But nobody wants this really. We want something a bit more steady, right? We want this, right?
Yeah.
We need stability, because even if for risk assets, the dollar is technically giving us the conditions which are good for risk assets, because the dollar is no longer the only factor with trade wars, all that kind of stuff. It's becoming almost irrelevant, because this really should have kicked off the altcoin bull run, the beginning of this move, but it hasn't, because there's so much fear. So again, talking about correlation and pegging, Bitcoin and the altcoin market is now moving away from this, because this is just a symptom, right, of what's going on. And it's
sorry to stop you, Paul. I just wanted to show you a trade that I got into and got out of, and I just want to show it. Is that okay?
Yes.
Sorry about that, man. I know it's rude, but is it rude? No, if I knew it was rude, I wouldn't have done it. I don't think it's rude.
We are serving our community.
Okay, let me know if you can see the chart. Yeah. Okay, can you see the chart?
Yeah.
Okay, so just exactly what I've been explaining earlier. Bearish on the 15, bearish on the half an hour.
Yeah.
A break there. Do you take that trade? No. Why not? Last pivot is right up there. Take profit is at the closest or the nearest support level, which is 2 standard deviation. There's a second break, much tighter stop. Take profit at the 1 standard deviation with the breakout there. You see, but like I said earlier, I want to see at least confirmation on two candles.
Yeah.
Sorry, on 2 different time frames. Bearish. Overall sentiment bearish. Confirmation on 2 time frames. And then just a very good reason for entry on the smaller time frame or the trigger candle.
Yeah. This is where it's at. This is absolutely where it's at. This it doesn't matter what you're doing. It's like with anything, you just need to have a look around, know your surroundings. That's it, right? It's the same with life. It's with anything.
Yeah, exactly. So, but it's really like, if you do a lot of it, I mean, my success rate is not 100%. I mean, I lose 40 to 50% of my trades. But it just depends on the week. Last week was 62%, but that's good. Many people will frown upon that success rate, but if you take out more than what you risk, and you can do that over and over, your trend is going to go just in one direction, and that's up.
Yeah.
So, but anyway, sorry to interrupt. I just wanted to show you because it's pretty much exactly the same setup
Yeah.
as the one I showed you in the recording. It's exactly the same approach. Yeah.
Rinse and repeat.
Rinse and repeat, but it's on a this is it's easier. I think it's I say it's easier to do on the smaller time frames. I think it's just easier because the duration of the trade is not that long. Remember, like if you focus on the daily time frame, you get one candle a day. On the 1 minute time frame, every single minute a new candle forms, and every 15 minutes a new 15-minute candle forms. I know it's not for everybody, but
this is again the importance, right? You've done your trade, you've seen another opportunity, but you've got to then start from scratch. Right, you've got to start from scratch, right?
Yes,
you
need to cleanse the palate.
Yes,
right. You need to you need to kind of like just like reset your, because I see it as like, okay, I want, it's almost like a deck of cards, like let the markets reshuffle itself a bit, just like a reshuffle the cards. And hand me some new cards and let's have a look. And because a mistake, a very easy mistake to make, is to try to flow or stay in flow with whatever the market is doing. Does that make sense? So I can say I can get an opportunity, like for example over here, there I took profit on yesterday's low. Now it can bounce off. I can very easily try to go, okay, there it finds resistance at the EMA. Maybe you go short for another one. Maybe there's nothing wrong with that. But you see what I mean? So if there's a resistance, it fails there, you can trade that way. But
I mean,
you can very easily, especially if when you start to just get it wrong, you can very quickly, it can just spiral out of control.
I do think it's a solid rule to, like, once you've done a trade, to wait, just to wait.
Yeah.
I mean, because it's an emotional thing. It's and my biggest successes have been when I have taken my time. I've done a trade. I've then waited a few days to re-acclimatize with the market and then go again. And that will bring you success rather than, oh, it's at support, I'm going to buy. Oh, it's at resistance, I'm going to sell. Oh, it's at support, I'm going to buy.
But it's so important. Like it's really like, let the markets kind of just reshuffle itself a bit. Because when you go away, like you just mentioned, when you go away for a couple of days, you come back. It just, you face a new chart. Does that make sense? You just look at a real different. But if you keep following it and you like watch, I know there are people watching charts 10, 12 hours a day. That must be very tough. Well, it is tough because I've done that for a long time. It's not a good idea. But yeah, you're absolutely right. Just kind of take a break when a trade plays out and you got it, and then just stop for a while, whichever time frame you're on. Because
you have to look after this. You really do. Right.
Yeah. So, sorry, I'll stop sharing my screen. You can go back to what
I mean, today, I got 2 new charts, but it's the same. It's just trying to get a bit of perspective, right, for people, because it's tough out there. People have a lot of answers, and we showed them these long-term charts yesterday to get an idea about. So go back and watch that, guys, if you want to hear me talk for non-stop for 60 minutes about that, and this one as well. But right now, so you mentioned about fib levels yesterday. So this is obviously the difference. Switching from a regular to logarithmic can obviously give you additional insights. But this is Bitcoin 3-day log scale, which means essentially it's based on percentage gains as opposed to anything else, if I've understood this. And this is, of course, represents a primary trend in this particular scenario. And as you can see, outside of our usual Bitcoin charts, which, we're in the decision zone, we're under the 200 MA, boohoo, we're all crying, there's a bit of divergence, we don't know what to do. But this can help us cool down a little bit and have a line in the sand. And right now, we're at this key buy zone, which seems to be syncing up on this chart with the 0.5 fib level, which is which is pretty good confluence. But this isn't just about, Paul, are you saying buy now? No, what I'm saying is this is the line in the sand to watch, okay? If we lose these primary trends on the higher time frames, we're going to struggle, right? Because this has been in place for a long time, for a couple of years. So we need Bitcoin to kind of do what it's done previously, hug it, and then find its foot. We need it to do that, because you imagine what investors are going to think when we get a breakdown, okay? And then we're below what is clear support, after following a necessary retest. So these lines right now is where it's at. We've got to pay attention to what's happening here and what happens next. We know that 73K is the beginning of this very tight support range between about 70 and 73. But this trend line, we don't want it to break. So argument for a bounce, I mean, I can look at just put the RSI on and see if there's anything obvious giving us any help here, and there isn't. So there just isn't. But we are entering oversold on a pretty high time frame, the 3-day. So this is what we need to be watching, right? And this is what everybody will be watching, just to get a perspective. Because if you're looking at these charts, you're not seeing the primary trend exactly. You're not seeing potentially where there's going to be reversal, and you're not necessarily seeing that if the price action comes down here, which is equivalent of breaking that diagonal trend line we just saw, that's really bearish, and that's a problem for Bitcoin. But we're not bearish yet. And to give you a bit of hope,
well, do you know what, Paul? Sorry, carry on.
No, go.
Sorry.
Go.
No, I do have something for you that is definitely going to help you in your trading. And it's for Bitcoin. This is probably the most reliable pattern of them all. You ready? Can you just let me just quickly share my screen?
Yeah, okay.
Okay, so this it's high success rate, very high success rate. And why is it not sharing?
Yeah, I can't see it yet.
The dinosaur pattern.
You're going to show me Bart Simpson next.
Okay, well, there's a couple of very important steps to follow. Okay, step one, you must have a few drinks. That's step one. Step two is draw a straight line, and then from there you just kind of let the dinosaur unfold, and then you just buy the neck, and there's your move right there. It's not very difficult to understand. Yeah.
Right. And what's the price point of the neck?
You want to take a screenshot? Do it right now, because I'm not sharing this with anybody else. I'm telling you, Paul, I like you, man. That's why I'm sharing this with you. I don't share this stuff with anyone. So
I'm going to be right. I'm glad it was you which shared that and not me, because they won't put me back on a stream after this if I'm the crypto guy. Well, I mean, whatever pattern works, right? Whatever pattern.
Yeah.
Just
like, I really laughed when I saw this. I'm like, this is genius.
I mean, are you suggesting that once this bull run peaks, we're going to go back in time? Is that what you're suggesting?
We could do. You never know.
Okay.
You never know.
Right, I'm clearing that off because we have a reputation.
Okay, let me stop. I'll stop that one. Okay.
Thank you for sharing
that remains between you and me, Paul. That's very important.
Yeah, it's not like this is a live stream and this is going out to
Yeah.
I'm going to find that. That's very funny. That's very, very funny. I'm not sure I could take this chart seriously now. I'm looking for animals.
Yeah.
Is this a swan? Right, no.
It's a swan. Okay, sorry. All right, so yeah, you were talking about the Bitcoin, the one on the right-hand corner, right-hand side on the support level. Yeah.
Talking about looking for historical trends and all kinds of stuff. Now, these are both mod scales. This is 2015 to 2017, right? And I want you to really think about, right, what these people were feeling when we had this pull down right here, okay? Right up to this trend line. right? What were they feeling? And then look what happened following it, okay? The next leg of the ballroom went up, and this took it all the way up to 20K, okay? Now, here we are, same period, but just same couple of year period, but obviously 5 years later or so. And we're in a similar predicament, okay? Now, we could see a bit of movement and then a bounce, but again, this is the line. We're right up against the line. And when we are up against a primary trend line and the market is giving us really bearish news and really worrisome, we lose that level. The time it will take for Bitcoin to recover will be not a matter of weeks, but months. And that doesn't mean that the bull run won't continue, but it means that these economic headwinds are more severe than anything we experienced in the pandemic. So we need some relief quickly in order for these charts to invalidate, because the altcoin market, as we've established, hasn't had its day yet. It just hasn't had its day. And the only thing which is keeping us largely bullish, i.e. people are trying to buy, support, and plant their seeds for the upcoming presumed run up. If Bitcoin, which is doing fine at the moment, loses one of these trend lines, then it will set the market back significantly. So the next week, the next couple of weeks are extremely important. And if you are an investor and you're looking to get into crypto, this is what you need to be paying attention to, not the charts for your altcoins or setup. You know, we're looking at Bitcoin Cash and Ethereum. We see what's happening with all of them. We see how dangerous it is at the moment. You know, we've got this, you know, this was Litecoin. It had just moved above, like into the next range. And now we risked coming back down again, which is resetting. After all this time it took to break out, we're now forced to come back down. And a lot of cryptos are not even, you know, don't have that positive sort of price action. So I wish I could say to you, look, here's Litecoin or whatever, and this is the trade because everything's good, but it's not. Right now, we just need to wait, and we just need to hope that we get a bounce here, and sanity prevails, perhaps on the global scale. But this is great buy opportunities, moments of fear. So it is a good place to buy if you're thinking of investing in Bitcoin, but you need to be mindful. You should not be coming in with whatever your intended portfolio size is at this point with anything. If you're looking to try and scoop up, you know, these low prices and these good entries on the primary trend, the same with Ethereum, you know, be very cautious because we can very quickly move out of our buy zone and move down. You can still see people are quite bullish, right? There's a lot of buy orders here. They're expecting hopefully a reversal because this is not good. And we need to, you know, what comes down must come up and vice versa. But this is the state of the play. And right now, long-term primary trend lines you need to be paying attention to. But that's pretty much all I've got for today. I mean, any thoughts on these charts?
Yeah, I don't like that last because you know if you look at that, the Bitcoin chart you've got on the right-hand side.
Yeah.
I'm not sure if you can zoom in a little bit, or do you have another one, or a full screen one, or not? Oh, you can do that. That's fine. What I don't like about that is that dome-shaped kind of, you know, because do you see what I mean? That dome-shaped.
Yeah, it's definitely clear double top.
It's not. Yeah, I really don't like, because you can very easily. I mean, yeah, sure, you had a very key support level there based on the slope of the channel. Because that's what it is. You have the bottom end of the channel. It's not really. Also, you are at a support level based on the previous price action. So you are hitting that. It was a breakout, pulling back right onto the support level. Yeah. But that's a very tricky place to try. I don't like the structure there. Well, as you said, anything can happen here, and the best thing to do is to wait for clarity, right? So you again, we mentioned this yesterday. You need to ask questions. What does it typically look like when it's obvious? What does it look like? Look at your trades that you've placed. Sorry, there's a. I can't see the message. There was a message coming through. I drew a baby birthday cake for someone when I was live trading a couple of years ago, and it ended up helping out a few days later. Hey, Robert, nice to see you, man. But what was I going to say now? Yeah, like if you like, especially in a situation like this, like it's really crucial to go back to as many people like first principle thinking. Is that applicable yet? Like, what does it look like? What do the good trades look like? And that is what you'll need to get on a situation like this. It's not clear. I mean, you've got the fact that it's pulled back right to the support level based on price action, and the fact that it's at the bottom end of the slope, the channel slope. But that's not enough, is it?
No, I mean, this is the negotiation, because you want to buy as close to support and sell as close to resistance as possible, but we need something more. Now, the reason why you want to do that, of course, is, again, this very basic thing. If the price action comes down, it will give you an exit, right? Most likely, especially with a significant support line, because the sellers need that. Because if it comes back down here, there'll be alarm bells for sure, right? But Bitcoin loves to just do this. It just loves to do that. So the sellers need to see a good bearish retest, something maybe, something like that, before, and not get back in before it comes down. So that's the argument for starting to scale in to some long-term positions if you're bullish on Bitcoin. But obviously, this is not really Bitcoin isn't really the problem at the moment. It's the rest of the market and the rest of the world. So you do need something more. And there's not really, I mean, you can start drawing lines in the sand, right? But, that's a bit of a stretch. But if you combine that, and this is just, I'm not suggesting, but if you combine this with maybe this, with some kind of reversal pattern, which with a higher low, that is a much more comfortable entrance for me.
Yeah, for sure.
Than where we are. And
well, it's very similar. Sorry to interrupt you, but it's very similar. If you think about the opportunities, the two opportunities I showed you today, it forms a very clear pivot. You can see the very clear turning point. Does that make sense?
Yeah.
Which is not something you get right there. But usually, if you have a bias, if your bias is long, you want to see that like a very clear pivot, because that's going to help you to determine your risk, etc. But that is also, just basically what you just said right now. If you can see, no, I can't see anything. You've zoomed out. You zoomed out on me, Paul.
Yeah, I did.
Right. Like there, the price action there is, that's not a point where you would want to enter, regardless if you long or short.
Yeah.
Does that, so what you said is absolutely correct. You want to see some sort of like.
You see it here, right? You see it here. You see it.
Yeah.
Right. And you come down. Okay.
Yeah.
You do obviously get some kamikazes coming in there, right? And they come up.
Yeah.
But then the second, everyone else is waiting for the double bottom or the higher low, and that's when it starts moving, right? Mm-hmm. So if you, unless you have a penchant for being, the first one into the mine, then just wait for your confirmation pattern, and then you've got the probabilities in your favor, plus the advantage of being at a support line, which will get retested, and because it's ascending, most likely at slightly higher prices, so it's a better proposition. But right now, we haven't got it, and we need to wait. The same with Ethereum, but thankfully Bitcoin is a little bit more positive. But if we lose these support lines, then we're going to be in trouble. But thankfully, Bitcoin is quite resilient, and right now, hopefully, we are going to get a bit of relief. But we'll see where we are on Friday, I guess.
Yeah, I'll just quickly, if you thank you. I'm going to butcher your name, Sugedi Pico. Sorry if I got that wrong, but thank you. Yeah. So let's have a look. I just quickly want to show you, because you just mentioned about retest, and I think this is true for any market you trade. Okay, so this is exactly the same as this trade here. You see that you get the break out of the support level,
yeah,
and then you get the retest,
yeah,
and then that's when you get the move, and that's going to allow you to get a much tighter stop, much better entry.
Yeah.
Right. It's exactly what you just said there. So you're going to, if you see that breakout, it will be very tempted to get in there. But where's your risk? Is it going to be right up there? That's a bit. That's not a good setup, right? Because it's just too far away. Just wait for it to pull back, and then you want to see a breakout again. You're going to get a much better entry with a very clear stop loss, and then you can expect the move. And it's exactly with that trade I recorded before the session started, or that I played with the session started. Exactly the same thing. These things keep repeating themselves.
Yeah.
You get the breakout. Where's your risk? It's way up there. Right, because that's how I trade, like, the previous pivot. So that's where my stop loss would be. It breaks out, retest. Now it breaks again. Your stop loss is now, it's very obvious now, and that's what I tried to say earlier. Just wait for something obvious. It will, like, at the moment it's not clear, and all you do is you wait until it does become clear.
Yeah,
and that's the advantage with what you have. Like, if you focus on longer time frames, you have so much more time. Like, you don't have a lot of time on the 1 minute time frame, right? You need to be pretty quick. But if you focus on the 1 day time frame, you just need to be patient and wait for a key level, like you just showed, that trend line. If it does get broken, it will most likely pull back and retest it. And if it does come back down again, it's going to allow you to get in at such as, like, it's a, with really tight risk and a decent risk reward ratio. So it's very, you can see, like, whatever you just said now, you can find that. You can find many examples, and that is how I trade.
Absolutely.
So anyway,
you just put yourself in the mind of the people who are trading against you, right? And try and figure out what they need to see for it to go in the direction you don't want it to go in. And then that in itself will give, just that thought process will give you an edge. But I think that's it, right? Are we done now?
Yeah, I'll be about 2 minutes over, but thank you everyone for watching. Paul, it's always great talking to you, man. It's a real pleasure. But enjoy the rest of your day, and we'll definitely talk again soon.
All right, sounds good. Thanks. Great session. See you later.
Thanks, guys.
Hey there.
Hey, what's going on?
Not too bad. We're not in the mansion today, huh?
Yeah, we must be we at the condo today, right?
How's it going?
Oh man, I'm doing great. I'm doing great. Trying to weather the storm in these markets. What about you?
Oh, yeah, not bad, not bad. Yeah, today I think I took the opposite trade to you from yesterday on the gold.
Oh yeah,
Yeah, well, only on the breakout, on the reversal, you know. I
yeah,
think
yeah.
yesterday was looking pretty bearish, and I've come in today and bought some. So
Great
yeah,
job, because yesterday, as you guys know, I can't swing it, so I had to close it. I ended up with a small scratch on that yesterday.
yeah,
Uh, but yeah, good entry on that one, because it was definitely long. Had I stayed in that trade, it would have
yeah.
stopped me out.
Yeah. That's why sometimes the end of the day thing can come in and save you a little bit.
Yeah,
You can always come in the next day, and if it's still working, you go again.
exactly. So sweet. But yeah, cool. Let's see, we got everybody in here. Guys, you guys already know. If you got any questions whatsoever, please let us know. We will get right on them. If you guys got some setups that you want us to take a look at, maybe if you want our ideas on something that's coming up, let us know, guys. We're open book. So yeah, we'll jumping right into it. Did you catch anything today besides that gold, or that was the main one?
So I was looking at dollar Canada. I was waiting for a kind of reversal on that on the way down, but it didn't happen. Didn't hit my level. Still a bit positive on that one, which I'll go through that a little bit later on. Yeah, no, just the gold today, really. That's the only one. Some other good setups that came in, but I didn't. I wasn't really participating in the earlier sessions. So
Right.
just the gold today, I think.
Gotcha. Okay. Sweet. Well, cool. I got a few going on too. I'll point them out here in a second. I know most of you guys have been on the streams. Like, for the most part, looks like Robert been on here, and a few other members as well. So I'm sure you already know who we are, but we'll go ahead and reintroduce ourselves, right? I'll jump in here first. I'm Mike, guys, aka FX Dinero. Everyone calls me. That's my trader name. A lot of it is because I trade currencies, and I'm living here in Mexico, right? So it's like my play on words here. But yeah, other than that, I am been trading for over a decade, actually about 11 years. 8 of those years failing, right? Just really getting a handle of what was going on. I was really slow to it. I'm like a very analytical thinker for the most part. So the fast-paced environment just wasn't my strong suit. I had to kind of switch things up, see what was going on. So thank God in the past 3-4 years, I've been able to find consistent profitability. Obviously with a lot of heartaches, a lot of losses, a lot of lessons. And yeah, just finally being able to become a full-time consistent trader. And since then, I've been actually doing some coaching, just kind of navigating, helping other traders navigate the journey, helping them to find probability as well. Do some coaching, some counseling for a few companies here. And I have my own fund as well, where I am doing the same in essence. I'm teaching and I'm running my own fund. I've got a little over $1 million under management. And yeah, guys, that's pretty much my story. Love sharing my expertise. I could talk about this stuff all day long, literally, as you can probably tell. And yeah, just really excited to be here. And again, if you guys got any questions for me specifically, please let me know. Howard as well. We'd love to answer them for you guys.
Absolutely. Yeah. My story. I've been in the markets for I think just over 30 odd years. I look a bit younger than my years, I guess, to some extent. Mainly foreign exchange. Although I've covered most of the other asset classes over the time period. I tend to find that foreign exchange FX is more my favored market because it's much more pure and less open to manipulation on some of these major currencies because they're so liquid. For me, it feels that much better to do currencies. I like the 24-hour aspect of it. You're not kind of limited to pit sessions and things like that. So you have to watch out for those weekend gaps and things if you're holding positions overnight, which I like to. But obviously, when you get big news and you get weekends, that's when you need to think about, you can't really be trading with like sort of 10, 15 pip stops like that. My trading style tends to be very much buy high, sell higher, sell short low, hopefully cover short even lower. I'm very much a momentum type trader. I like to look for breakouts and also false breakouts, because I think that a lot of the best moves that we should be aiming for in the markets tend to form after a market has formed a trap. Traps tend to really be a great trading setup for me. I like to get to a point where I can see on the chart that there's a significant number of people who are on the wrong side of the market. It probably sounds a little bit unethical, but it's just the way that the markets roll. There's a lot of chaos, a lot of noise, but if you can kind of look beyond it and just wait for the right kind of setups, then that's really the way to go. And having a plan is always a good thing as well. Controlling your risk on a micro level, on a macro level, on a micro level with stop losses, on a macro level with percentage of account, etc. And just know really what you're, when you've had enough on a bad day. There will be good days, there will be bad days, but overall, if you've got a good methodology and you stick at it and you don't walk away if you have a couple of bad days in the office, then I think you'll do okay. Yes. So that's kind of me in a nutshell.
Yes, I agree. Definitely that you got to know when it's enough. Like if you get into a fight and someone's got you in the full Nelson, you got to tap out, right?
you got to know the guy's he's much bigger than you.
Yeah, he's gonna break your neck if you don't just quit. All right. So yeah, I definitely totally agree with that part of it. And yeah, especially the trap moves as well. Like even yesterday, right, about that gold trade, like as I did my broke down and my analysis, I was saying where I feel traders are trapped at, right? And I'm like, hey, if they break this level, we're good to go. It'll continue to go down, but we just need to be ready for this particular bounce. As a matter of fact, let me pull up my screen. Go ahead and pull up my screen here while we go at it. Entire screen. Cool. All right. We'll get into AU in a moment. And you mentioned UC earlier today, UCAD. I want to bring that up too.
Yeah, pretty strong today.
You know what? I was actually, it was that news. It popped off right at 10 o'clock. That 10 o'clock news kind of took it to a whole new level. I'm actually testing out this bot, which is pretty cool. So that's what that was. I'm like testing something out. It's actually doing pretty decent, to be honest. I'm like pretty impressed. But I'm not really a bot kind of guy, but I don't know. I'm just playing with this thing. One of my devs is like, hey, I've been seeing a lot of this and that. I'm like, all right, whatever you can play with, like, let me know. So he asked me 1,000,001 questions, obviously. And then he got something going, which is super surprising. Well, cool. So I left this up here for us for yesterday. Right. Remember, we got in here. I took this trade right at this close, right? And I wanted us to go ahead and break below this green area. And as you see, it's kind of bounced right off of it. It never gave a break below all of this area. Once this, and always for me, always, once the candle closes back up on the other side of the 13 EMA, which would be this green candle, yeah, that you're definitely out by then, right? Definitely. And that would have, as you can see, avoided the full stop out. So I did take a hit on this one yesterday, but I had to get out before I got drained in that sense. So good to know that you grabbed that going the other way. Somebody get that to get the funds, you know.
Yeah. No, I'll yeah. Once we've done your explanation and stuff, I'll go through mine as well. So we got both
Sweet.
sides of the coin on gold, I guess.
Sweet. So yeah, I'll take this off since there's nothing here. Right. Yeah, we were looking at this yesterday on the 4-hour chart. Yeah, we were looking at this yesterday on the 4. This candle, this vertical candle was my short yesterday, which, man, they did a good job of manipulating this area. Well, yeah, I had everything I needed. And this is the cool part about trading, right? Like, as I look back and I do my trade Zilla and my markups, this goes in my book yesterday as a natural loss. So even though I did take a green on my book, a red on my book yesterday, which is, part of the game, my process was solid, right? Like, absolutely solid. So as I always mention, that was the main thing that we look out for.
Yep.
Now, one thing that I did mention too, the only thing that I didn't like about this, as I mentioned, is the touch to the 200 EMA. I don't really like when it does that because my ride initially, as I mentioned, so you got that M up here. I want it to come down here, but I want it to miss the 200 EMA because I know there's orders on the other side of that. Then I want them to come back up to this space. And then I want to ride with them on the first touch to the 200 EMA. This technically would have been the second touch towards it because, again, it already touched it. So the move is a lot cleaner in this setup when you don't have the touch to the 200. Now, this is to the 200 on the 4-hour chart, but this same setup, again, it's fractional, guys. So this might go over a bit. So the same thing would actually happen on the 1-hour chart as well. Right. So this same thing on a 1-hour chart, it will be the 200 EMA. So I don't like it when it does that, but nonetheless, it was still a great solid setup. So yeah, this one just didn't work out for me. But definitely got out of this before. Oops, let me go ahead and delete this. Before this actually, stopped me out on this particular exit here was this candle, right? So I got out on this candle on this green close above the 13. For me, that is my exit signal. There's actually two things that happen. One would be, I'll go ahead and mark this up right here, how this candle closes above the 13 EMA. And then secondly, going the same direction, right? How right here. It's kind of hard to see, but how at first I had my RSI line was at the bottom, right? And my signal line, which is the red one, is at the top. But as soon as these recrossed each other and go back the other way, in addition to my close above the 13 in this particular setup, if it was short, obviously it'd be the other way around. But these is a double confirmation that I need to get out of this. What will happen sometimes is the trade will, something like this will happen, like it'll give you a close exit signal on the actual chart. But on the TDI, right, the RSI line did not cross back above or below the signal line. And it's a fake out. So typically, if it, rule of thumb is, if it doesn't do both of them, right, then you stay in the trade. You continue to hold it. Because a lot of the times, if it does give that type of signal, the very next candle will be a pretty large one, right? Going back your way. In that sense, it faked you out. One of the million lessons I've learned, right, over seeing that. Imagine, those moves where you're right, Howard, where you're in the trade, and then soon as you get in here, like soon as you get in, it kind of goes like it gives you a fake, and then you get out, like take a quick hit, and then you get back, and then the very next candle goes your way, and you're like, they just faked me out so bad. Like I totally failed for their plan just now. Like I'm talking about fail right for it.
The market,
so that used to happen.
Yeah, the markets, they do that. They do that from time to time, don't they?
Yes. And it's horrendous. When it does happen, it's like, oh man, you got me. As you said, you got me with that one. That was a good move. So one of the things that we have in place to kind of circumvent that is you need both confirmations, right? You need it to agree, as I always say, on the TDI, and then also on the chart there as well. All right, so cool. Just resharing this. Yeah, so this is where I was on gold. This is for yesterday, right? Now, I want to go over to UCAD. You mentioned that one. I was looking at this today as well. This was actually the only thing that was on my watch list today. Yeah, was UCAD long, right? And so much so, right? Like this is how real this is. Right. So if you check out Forex signal watch list. Yeah, this is today, right? Watch list 3/11/2025 USD CAD long. This is my money trade. So super cool there. I was literally looking for this. But I avoid the news like the plague, right? So this was right at 10 o'clock. I couldn't, today was a later day. We couldn't take trades until after 10, right? Because of this huge news candle. I'm never in news, red news, like high impact news. I'm never in trades at that point. But I was looking for this move, right? So you guys already know, right? This is actually a scenario where we're doing longs. Typically I'm doing M's. But this is a break, retest, go long, right? This is the move I'm looking for, as I always say, in my market maker structure, right? First things first, where am I in the structure, right? Where am I? So I can see, whoops, let me do it this way. So we got this little peak low here, right? And I can see that this is what I'm looking for here. This is kind of fugly, but it's kind of the same model here, right? So I'm looking for this move here, right? This is that. It's the same thing, right? These two are the same exact thing. So this would be my setup, as I always mention. W off the 200 EMA. All right, this is exactly. Oh, I'm sorry. I'm not trying to take the W. I'm trying to take the bounce trade. So this will be the money trade here. Excuse me, I'm thinking of the W. Oh, is that going to change or? Oh, let's say, come on now, change that. All right, so my money trade is right there. This is the exact move that I'm looking for, right? In addition to that, on the money trades, you always have to have the fresh market baseline cross, right? As soon as this crosses, I'm looking on the chart. I'm looking for when this happens, right? Which is the 1350 cross here, right? I'm looking for that cross the very first time that price comes back and touches the 50. Now, I know it looks like it does here, which is fine, but that does not count. And reason being is this is the RSI line on my TDI is too far away from the static line. It needs to be less than 2, right? Because this could easily come right back down and take this out. So for a solid setup, you want this to be the RSI line to be closer to this. So this one doesn't count. The move is here, right? And this is why, obviously, they just happen to run with this on news. You see how the RSI line is all the way up here on this one. But on this one actually touches the static line. Like this comes down and makes interaction with it. So I was looking for this nice nice long in here after the news, right? But of course that never happened. And this one even had 4-hour confirmation. How I always talk about, I need to see my price on the above or below the 13 EMA. In this case, it would need to be above since I'm going longs, right? As you can see, price was way beyond this 13 EMA here. So I already had my 4-hour confirmation, right? So all I was really looking for was my confirmation on a 1-hour chart, which is a close above the 13 EMA here, right? After the bounce, so this bounce area here, the next candle that closes above the 13 EMA. Now, I didn't expect this, obviously, this news candle to be that huge. That's why this was a pass for me today. But you would have, let's say news wasn't there in essence, right? You would have hoped for a close somewhere there above the 13, right? So you would have jumped somewhere in here. Stops would have to go below all of this ADR low, and your TP would have been here, right? Which is exactly where they went. This is why I like these ADR points for me, because these give me some target areas, which is my ADR high right here. And coincidentally enough, that's exactly where it went to, right? So yeah, this is what I was looking for today on USD CAD. Obviously, the news ran, so I was not able to take advantage of it. But yeah, this is that exact trade, guys. Like how I always mark up this and show out the same pattern for one, right? As I always point out, first three things, always. Where am I in the cycle? Man, I can't spell sometimes. Where am I in the cycle? I need a pattern, right? Then I need higher time frame confirmation, which we had, right? And I need a entry signal, right? That's it. Same thing, right? Every single time. So coming out of it, number one is I know where I am in the cycle, right? I got this peak here. Right, so I'll put it on both sides actually. So we got this peak, right? And then we got this peak. It's the same exact thing, right? And then after the peak, we're looking for that break, right? It's not a coincidence, right, that this area is what was hit, right? More like this, right? So cool. So yeah, as you see, this came back, it dipped into this level here. This was a ton of orders and they knew it was, right? And right during news time, they just pulled this thing away, like tapped this area, pulled it away immediately, right? Because again, on the higher time, on the solid time frame, this is the retest. So you got the break and you got the retest of this exact same area, right? So I know where I am in the pattern. I mean, in the cycle, I'm looking for a pattern, which is that interaction off of this EMA here, right? So after the W, I'm looking for the bounce off of the 50 EMA here, which is the blue one, right? So I'm looking for some type of interaction on the chart. And simultaneously on the TDI, right, I'm looking for, again, the RSI line to come right on the static, right? Give me that interaction, less than 2 pips. And give me that interaction on here as well. And then my higher time frame confirmation. We already said that obviously this was on the right side of the 13 EMA at this point. This is above, right? It's definitely above this red EMA here. So 1, 2, and 3 already checked off. The only thing was, obviously, as I said, it was news. It was news. So I had to stay away from this. Now, this did give you the entry trigger, as you see. You got this huge candle. It wasn't supposed to be all the way up here, though. You would have wanted it to be in here, closing here, right? Let's say 11, somewhere around 11 o'clock, and then take the ride up. But they moved the money super quick. So this is what I was looking at today on UC that did not plan out right, really. Howard, were you looking at longs or shorts on UC today?
Yeah, funnily enough, I was looking at shorts, but I never got my trigger. So that was a good thing. That was a good thing. Yeah, shall I jump in with the screens?
Well, let me go through one more. I got I'm
okay,
looking
go
at
for it. Go for
actually I'm actually in one. I'm in AU right now. So
okay, go for it.
I was looking for shorts on AU. Right, and it's actually kind of sitting here, which is strangely enough. But I got these EMAs up here, which are so cool, right? So if it gets up here, this is my stop loss. I'm done. Stop loss hit, right? So we're kind of. I luckily got in right around this price. So I'm in at 78. So I'm in around here. So it's pretty much slightly out of the money right now. I did a great job of holding it, waiting for this pullback. So I'm in shorts, right? Then I got this area. If it gets down here, I want to go ahead and move my stop loss to break even, and then my TPs here. So just looking at this one, I'll go ahead and mark this one up as well, right? So
you got the kind of retest on the bounce higher, yeah?
Yep, right in this area, right in this area, and that's exactly what I was going for. We'll see how it goes. Even the TDI looks good on this. But I'll go ahead and mark this up. Right, so same thing as always, guys. Same thing as always. Right. Scoot it over just a little bit. Okay, cool. So from here, this one looks a little quasi, just a bit, because it made this second little move up here, and then it broke in here. Remember, I always say, this is the move I'm looking for, one or the two. It can be here, or it can be here, right? After the M, right? Which is exactly what we have here, right? I say this every day, like the same stuff every day. This is the move, right? This is the market maker cycle. These are the same exact thing. Like, now, once it get lower than this level, obviously, now this could keep going. I mean, clearly it's keep going, but I would be interested in probably taking it off at the like right before the ADR low here, right? But in essence, it's almost like once you see this, you kind of can't unsee it just a little bit, right? Like, I move this whole thing. Oh, I can't move this whole thing. Let's see. Oh, okay, here it is. If this isn't the same freaking thing, I don't know what is. Right. This is my prediction for this. As long as I can get in, as I always say, on one of these two, level 1 or level 2, I'm fine. That's where the goal is. I never really try to catch this top. I'm always at the break of that. I mean, the retest of that area, and I'm never trying to catch that. Right. That area for me is these same two areas. Right. I mean, come on, I can't make this up. This just came up here today, just like this. Right? Like yeah. As I always say, at the top is the peak. Right? The peak is dangerous. Like, it's really, really dangerous. It's dangerous because you never really know with the peak. The peak could do whatever it wants to do. It's all about that level 1 and level 2. I'm not sure where that just went. I don't know what's going on with this thing today. Okay, I'm just gonna do it the old-fashioned way and just type it on here, I guess. I don't know where the peak, the copy is going. Okay, whatever. All right, so that's level 2. Same exact thing here, right? Right. So when I draw these up and I mark these up and I just go play to play once again, I can erase this and I can erase this. Right. So let me center it right here. That's close enough. Okay, cool. So same thing again. Where am I in the cycle? All right. 2, pattern. 3, higher time frame confirmation. 4, entry signal. Right. Every single time. This is all I'm looking for. Every single time. Okay, there he is. All right, so obviously I can see where I'm in a cycle. And this is why it's so important, because you can have that bias for longs and shorts. And also you can know when you should get out of the trade, right? So you got that double advantage there. 1, where am I in this cycle? I can easily see that I'm basically getting into level 2. This is a level 2 short for me, right? Level 2 shorts. And this is some good stuff, guys. I'm not really sure if y'all picking this up, but this is the exact cycle of how this typically goes. Right. And in addition to that, I have my market baseline, right? So also, what I love to see is when we zoom in here, I love to have my RSI line and my signal line above the market baseline for shorts like this, right? Like, I love when it happens in this method, like this form, because if it's below it, it has to come back up and kind of reload, right? And just kind of touch it. But if it's already above, it's good to go. So just how it's already above on the 4-hour chart for confirmation, the TDI for me is already great as well. So this was another reason for a great shorting opportunity in here, because the TDI looked great. And yeah, everything about this, right? So coming back to it, what pattern am I looking for? I'm looking for that play off the 50 EMA in this case, right? I want to see that nice M pattern in this structure, a nice bounce, a nice shift candle. When I say shift candle, that shift candle looks like this red one, right? See how everything looks fine. They got this big red candle that just comes out of nowhere and shifts this entire zone. So in one candle, it took back 1, 2, 3, 4, 5, 6. Nearly 7 hours of work. This is an hour candle. In 1 hour, it just really took back 7 hours of work that it just did, painting, collecting contracts in this exact order. Right. So I love to see it, a nice shift candle out of that area and it close below the 13, right? This is the first time that you can, since it's been up, because it's been above the 13 from here, right? The very first candle that closes below the 13, right? That's where you want to start looking for entries. On this particular one, right, it was a little close to the blue tracer here, which is yesterday's low. I like the pullback, right? I want to pull back to this exact area, right? So that's what I mean at 78. 78 is pretty much right here, right? So I wanted a pullback to where these two pins are. So these two pins are at 81, a few pips off, right? About 3 pips off technically. But I was ready for this particular area. I wanted it to come into this zone, and I wanted my pullback. It was one nice little pullback, right? I took it all the way up here around 78 versus taking it down here at 68, right? So I got a 10 pip discount right there just by being patient. And you guys saw yesterday how patient I can be when it comes to these setups, waiting them on out, right? So I had no problem doing that. And yeah, that was my entry signal, right? So we know we are in a cycle. We had our pattern off the 50 EMA, right? We had the higher time frame confirmation, and we had our entry signal, right? The added plus was the TDI agreed with the chart, right? And the RSI line and signal line was already above the market baseline, which was beautiful, right? And yeah, that was pretty much the nooks and cranny of this. So I'll take all of this drawing off, right? Lots of that. And yeah, we are in this short. So I'm basically right at break even. I'll be closing this at 355 no matter what. Hopefully it can drop down, at least give me some big candles here so I can close into a small profit. If it closed below this blue tracer, which is yesterday's low, it should be good to go, right?
That's the acceleration signal, huh?
Yeah, if I can get a close below this point here, yeah, I'll be in good shape. You just need that close below this area right here. And yeah, not too bad. Not too bad at all, right? So it's literally at my entry price where I got in. And again, my stop is right above the swing point, of course. Always have to be above the swing. I mean, that's 78, cool. Right? And my stop loss. Oh, my stop loss is 73. I'm sorry, 63. At 6,300. Right. Then my TP is down here. So almost a 1 for 2. Right. 1 for risking 1 R to make 1.8 R. Almost a 1 for 2. And this is not bad at all, guys. So this is the only one that I'm actually in for today because my UCAD didn't play out the right way. And I think that was about it. Yeah, this was the only other one that I really remember. NCAT, now, let's see. Which one was it? I gotta look. Hang on. So it was, yep, NCAT. It was NCAT. Okay. NCAT I saw, but I didn't really like it too much, so I didn't put it on my watch list. Just really quick, and then I'll hand it over to you, Howard, so you can kind of share with your thoughts on everything. But for me, once I get this 5,200 cross, as I always talk about, guys, and this is actually a 5,200 cross and an 802 cross in the exact same manner, right? At this point, once this happens, right, I'll put after 5,200 cross, I am looking for a M or W pattern off the 200 EMA, right? That's the very next thing I'm looking for after this. Actually, I'll put it here for aesthetics. All right. Now, as you see, price never actually came back and touched the 200 EMA. right? It never touched it since it crossed. So if anything, I was actually looking for a move. Whoops. I was actually looking for a move that looked more like this. And a W structure like this, and then go long, right? Because you got that W back there. Now, this is kind of funky already in itself, which is another reason I kind of didn't like it. It was just kind of too off a little bit. And then for neither one of them to actually make the M pattern off the 200 EMA, that threw me off. Right. And then just the final nail in the coffin was the fact that this was a no trade and super patch for me was with my W's. Remember, on a TDI, I need some. Let me take this piece off. I need some type of reload. As you guys remember me speaking about this quite often, I need the market baseline to go below the static and make a pattern like that, right? This small area in here is my reload, right? For me, when I have a W or M, if it's an M, it's the other way around, right? It will be going above the static and coming back down. So it's just doing it the opposite way. But in these particular cases, it has to have a reload, and it doesn't, right? So not only do we, I'll type this up, not only do we have no pattern, right? We had no touch to the 200 EMA, right? And then we had no reload on the TDI, right? This is a no-no. This together means, all together, it means pass on this trade. Seriously, this is nothing at this point. Since it did all of that funky behavior, this does not meet my trading parameters. This is a no-go at this point because it's doing too much bouncing. It's not giving you the touches that it really needs to. This could easily, like, even though it didn't because of news, but this could have easily just came up here and then went down. Well, let me delete all of this first. Without that touch to the 200, this could have easily, came up here and then just fell off to the 200 and then started trying to make the pattern that way. To try to take it here is risky, right? Because I'm expecting it to touch the 200, which it hasn't. So I'm staying clear away from this one. So yeah, this was the only one that was kind of close, but I mean, that I gave a little bit of extra attention to in essence. And that was really it. The rest of these are just falling off the map, as you can see. NASDAQ 100, US 30, S&P 500. These guys are at like scary lows at this point. Yeah, you did have the fundamental on your side with the gold long, right? Typically, when stocks are falling, gold would typically rise because people sell their stock and buy gold, right? So you did have that fundamental bias on your side with this one.
So sometimes it works.
Yeah, for sure. So yeah, you were all set to go. Good session. But yeah, that's pretty much wraps me up for today on my. So we covered my goal, what happened yesterday, my rules for closing it and exit signals, the setup that pretty much we were looking at to occur on USD CAD, but we couldn't execute on because it was right at news. And after that, kind of just ran with it. And then closing it out with AUD USD, which we're still in at 62.78. And yeah, just kind of went over my bias as to why I would not be interested in CAD, right? So that's pretty much my entire trading wrap up here. Yeah, I'm curious to see your entry and your process and your mythology for and ideology rather for jumping into this gold long today.
Okay. Okay, here we go. Let me present my screen. Okay, so let's see. Go. Can you?
Yeah, definitely turn all the way around and said, no, we're long now. We're not short anymore.
Can you? Okay. Yeah. So you can see the screen. So so what I was looking at was so basically what I like to do is I like to trade in the direction for my shorter term stuff in the direction of the previous day's bias. Now the market it likes to swing up and down for maybe 1, 2, sometimes 3 days before it turns around and goes the other way. Excuse me. So I use the 75% and 25% of previous day's range if the range is a significant range, as I like to call it. So for example, dollar Canada, it was in a downtrend going into the recent low, and then we did pretty well on the short side on catching these moves on the way down, and then we had the little bounce, and then we broke through the 75%, which turned the trend up. So we've kind of seen this kind of series of higher highs and higher lows since then. So today I was getting ready to go short at the 25% level, looking for another one of these down cycles for maybe 2 or 3 days. But obviously the news came in, and I guess fortunately for me, I didn't get short at the 25% level. I had a pending order down there waiting to sell it. But didn't happen, and then obviously the news kicked in and it blasted higher, and we're seeing an extension, a resumption of this kind of uptrend of the past few days. So I guess being disciplined and not thinking well, we're going to hit the level here. You should wait until you get your level.
Yes.
At the end of the day, it can save you. It can save you so much money and heartache as well. It's better just to pay the extra 10 pips or 15 pips and have a proper trade rather than sell the low and be sorry kind of thing. So there was that on the shorter term thing. On the longer term thing on dollar Canada, I guess sort of stepping back a bit, I do use Elliott wave for my longer term analysis, and dollar Canada on a big picture. We're kind of, for me, in the 5th and final wave of this big rally that we've had since 2007. I think it is 2007, October 2007. So a 5-wave sequence. 1, 2, 3, 4, and here we are breaking higher, slightly higher in wave 5. So wave 5 is always the last leg of a larger sequence. So the trick would be when you're looking to trade using Elliott wave is to either look for the end of a 5th wave or look for the end of a corrective ABC move. So the impulsive moves, they break down into 5 waves. The corrective waves, they break down into 3 waves, which are labeled A, B, and C. So A, B, and C, like that. So my outlook is really looking for the end of this 5th wave. Now, looking at the monthly candlestick, we had that outside candlestick on the last month. So that for me gave me a bit of a not so much a clue, but a bit of an indication that maybe we've seen the end of this 5th wave. So I'm kind of that's really what I'm doing. I'm kind of probing away, looking for bearish shorter term structures to give me an entry into this thing. On a monthly basis, when you see these kind of big reversal candlesticks, the outside month, sometimes they can be form at the end of very long, important swings up and down. So sometimes the monthly reversal like this, the outside month, can give you a bit of an idea that maybe that's the end of that particular, the trend that preceded it. So that's really kind of my rationale for looking for the top on dollar Canada. Obviously, it didn't come because we had the number today. Also on the daily chart, we've got this trend line which is being tested on the pullback from the recent high. So be interesting to see whether we can close above this trend line. We're kind of right on it right now. So if we can get a good close, then maybe that's the indication that it's actually, it needs to go higher before we can think again about topping. But so I think today on dollar Canada, that one's a little bit in the balance, I would say. Interestingly enough, obviously the dollar has broken down quite sharply against the European currencies in particular. So and dollar index has started to break down lately too. So I'm looking for a little bit of confluence there when it comes to dollar Canada, maybe playing the game and joining the rest of the party in a dollar decline. But I need to see that some technical signals that it's ready to do that. So I guess on dollar Canada, I'm kind of on hold for the time being. Maybe tomorrow, should we get a big break lower, then I'll probably get back in the get my selling boots on again. But for today, I'm not really interested on the short side, and I think the longs have really had their move on the figure. So let's go back to gold then. That was the one we were looking at before. So gold, obviously starting off with the bigger picture, gold has been obviously in this massive advance. Again, I think we're in a kind of a fifth wave higher, but I think that fifth wave has got a bit more to go, purely because looking at the monthly candles, we had the last month where we pushed to a new high, but closed kind of in the middle of the range on a monthly candlestick. But this month so far, as early as we are in March, we're pushing higher again. So this looks to me like one of those kind of what I like to call a double trap, where the market breaks up, closes down, trapping the buyers, and then sellers come in looking at the candlestick, thinking that's the top, and then the market actually starts to go again in the direction of the move, the next candle, and that's really what I think we're doing there. So I think there's a little bit of what I like to call unfinished business here for the buyers. I think we will see a new high in gold, even though maybe we might get up to 31 or something like that before it can start to top out. So my outlook is kind of shorter term is bullish on gold. Let's just go to the daily, because I think we've got some interesting stuff I wanted to show you on the daily. This kind of pattern here, where you get this big 1 day, what I like to call a fake out, a big red candle on one particular day where it breaks through support, it closes weak, and then it looks like it's going to hell. And then the next day you get the reversal high in the direction of the trend. And I think that's what happened yesterday, where we had the breakdown through support, and then the next day today we're starting to break higher. So just looking at some of these examples here, where you get the red candle, and then the next day the green cancels it out, and then boom, following day down, a bit of a turn there, boom, boom, next couple of days down, up, slightly sideways, then boom, boom, like that. So it looks to me to be one of those kind of 1 day fake outs in a bull market. So that's really my rationale really for getting in on that 75-25 rule that I like to use for the retracement levels. The reason I use 75 and 25 is because when people look at retracement levels, most of them tend to be kind of the key ones are like, if you're looking at Fibonacci, you're looking at 61.8 and 38.2. If you're looking at Dow theory, you're looking at 33% and 66%. So 75 and 25 for me really tends to encapsulate it. So if you've done a 75% retracement of a move, for me the odds are that move is really done, and that we're going to see the bigger move. If you're kind of sitting there, hoping that the retracement levels are going to hold. Well, I think if you hit the 75 or the 25, then more often than not, it's not a correction, it's the start of a new move. So Another thing I wanted to show, another kind of thing which kind of keeps me bullish on gold over the short term, is again back to Elliott wave, where you get that ABC move against the trend, where the market breaks down in 3 waves, and then up you go, and then you get an ABC. I think yesterday's low was the end of a minor ABC, A, B, and C, and most likely to be the second wave. That, you know, we're in wave 3 now of this move, which should take you up to new highs. So trend still up for me. ABC down. When you get the ABCs, that tells you that the bigger trend is up, and the sub waves of the impulsive waves, wave 1, wave 3, and wave 5, they break down in a nice sort of 5-wave sequence. So it tells you which way the trend is really focused. Again, you go back to, you know, before this ABC. Obviously, we've been in quite a mega move to the upside. So the corrective waves, you know, tend to go ABC, and then the buyers come in. ABC, then the buyers come in. So that's really kind of my rationale, trading gold from the long side, but usually waiting for that 75-25 thing to kick in. My trade today really was literally buying the break of that 75% retracement level. In fact, the funny thing was I wasn't at my screen for a couple of hours, and I actually missed the entry trade, so I just got it on the pullback.
Love when that happens.
Yeah. So I said, okay, I've seen the breakout. Look, I want to buy this, but I need to buy it at the level. So I put a limit order in at this level, and that's really where I got long. With regards
they came
to
back for you. That doesn't happen often, where they came back and picked you up.
Yeah, exactly. Hey guys, you missed me. Come on.
Right. It's the equivalent of, I feel like the bus driver actually sees you in the rearview mirror and he like stops and like wait on you. And you're like, oh, thank God. Thank you so much. Versus running behind the bus, like, wait, you forgot me.
Yeah. And yeah, sometimes I know you like to wait for the retracements as well and things. I tend to be much more of a break trader, so I like to buy kind of right here before this thing, because sometimes the market can ramp. But if I miss it, then you always get some sort of pullback. That's that tends to, unless it's really news driven. The market does tend to do that kind of seesaw thing. So you very often get a second chance to to get in.
It gave it to you right at the level, like almost to the pip. That was nice.
Oh, yeah, it was nice to do that. So literally, I came in about here. I said, okay, I've missed it. I put the limit order in at the level at which I should have gone in, and fortunately, it did it. I took a little screenshot of it. I don't know if you can see that.
No.
That not coming through. Oh yeah,
I can see what you got in there.
Okay, no, not to worry. No, I did a screenshot literally because I was away from from my PC, so I saw it happen. I just took a screenshot and just to kind of show that it was live, Anyway, so this particular trade, this for me is like a 2-day trade. It's not a 1-day intraday trade. Because when bias flips from bearish to bullish, or bullish to bearish, or neutral to bullish or bearish, the move tends to last for a couple of days. So this is not a kind of buy it looking for a quick profit and then close at the end of today. This is holding overnight. So invariably I'll be in this thing until the end of tomorrow. So I'll be holding. I didn't say yesterday, did I? Not till the end of yesterday. No, no, that would be good. So I'll be looking to hold this thing. Looking for going back to the. Let's change that to daily. Looking for that kind of second day of the move.
Gotcha.
So. Yeah, so you're in on the kind of reversal day, and you're looking to hold it until the end of the next day, maybe one day later, depending on how it is. But for me, this is just the move just beginning. So maybe tomorrow we come in and we see this thing pushing higher, and then I'll be looking to get out on strength at limit using limit orders as we hopefully break higher, and to trail the stop. I like to trail the stop when I hit my targets. I like to trail excuse me, I like to trail the stop up, to the entry price, and then locking in some profit, etc.
That's what I was going to ask you next. That was my next question. At what point do you move your stop loss to break even?
Yeah, I usually like to do it when I hit my first target, which is basically in this case 3 steps up. And when I say steps, what I usually do in terms of determining my daily bias is what I do at the end of the day is I divide the range up into eighths. So 8 equal zones, 12.5% of it each. And I usually use 3 zones as my kind of stop and my target level. So 3 zones down from 75 would be, I think, 37.5%, which is where where the stop loss is, and this is 3 zones above. So I like to use zones based on the what I call the significant range, and for me the significant range is obviously yesterday's range that we've started to reverse. So yeah, as we hopefully hit the targets going into tomorrow, I'll be raising the stop up and locking in some profits with a bit of luck. So that's gold. Let's see. So yeah, euro dollar had a nice move higher again today. A very kind of shallow correction. Nice upside breakout there. I wasn't really following it early, unfortunately. Would have been a good breakout trade, that one. But again, just looking at the my bigger picture thing on this thing, I think this is euro dollar. This is a monthly chart of euro dollar, which is obviously the main driver of dollar index. And for me, we had a major low here back in 2022, and then a first leg up, and then we've had this ABC. Remember, we were talking about ABC moves go against the trend. So A, B, and C. That's a corrective wave, and this is the start of the next leg up, in my opinion. And it should take us up to maybe 120 or maybe even higher. Should be quite a big move higher. On euro dollar, so the backdrop for me is really of dollar weakness. I think I mentioned this before. I'm really a technical guy, but Republican administrations, of which we've started one fairly recently, they tend to see the dollar decline double-digit percentage against most currencies over the tenure of the incumbent, whereas Democrat administrations see double-digit the other way around, and this has really been the case since the dollar free float back in 1971, I think it was.
Right.
President when Nixon let the when he let the gold standard. Yeah. So for me, having a Republican administration in there, that is a dollar negative over the long term for me. So and the technical, this actually I think is bargain basement for the euro against the dollar on a multi-month, maybe multi-year view as well. But from a short-term trading perspective, I think just going with the daily bias and seeing where we are. Daily bias is up based upon the breakout of earlier today, just resuming the uptrend.
Nice.
Any questions on that stuff?
No. As of now, it was really just at what point did you move the stop loss? I didn't know you divided up into those quarter points like that. That's pretty interesting too.
Yeah, it gives me a frame of reference. I mean, I like to use percentages of significant ranges and also channel highs and lows as well, because they can be they can be quite good for trailing your stop when the distance between these these levels are too big. So it's always good to have reference points on the chart that you can use. And I like the idea of coming in with the bias based upon yesterday. Because the market does tend to like to have a move in the direction of yesterday's bias, because there's always some people let's say, for example, the market went up yesterday, whatever market we're talking about. There's always going to be some people that are short and they're hoping the market reverses. And these are the people that are going to be maybe driving the market higher. When push comes to shove and you start breaking through the previous session's high, there'll be short people getting out, and there'll be long entrants coming in, looking for a move higher. So it's good to have a kind of frame of reference, I think, based upon the daily time frame, if you're looking for a good intraday move one way or the other. But that's kind of what works for me. Just a combination of Elliott wave for maybe my bigger picture stuff, and breakouts, daily bias, and retracement levels and projection levels for my stops and targets, that kind of thing.
That makes total sense.
So, but I guess just having ideal, good setups, so that what you're doing, because it can be quite chaotic sometimes.
For sure.
So we try to make order out of the chaos if we can. That's the idea.
Yeah, that's the main thing. Like even now, I just had to close this AUD cat AU trade. This closed above mine. Let me share my screen. This closed above where I would have liked it to at this point, and this could easily just keep going now. So,
yeah, it's always good to know when you've got that. For me, it's that kind of 75%, 25% level. It's like, no, I don't want to be holding.
Yeah, this is. I typically have a 2-hour rule anyway. Like I like to make sure I at least double check around 2 hours. As I always mention, right? Whoops, that's a little far. As soon as this candle closes above the 13 on the other side, I'm not interested anymore. And that's exactly what this did, right? So in addition to this green candle closing above the 13, how this did, which it still might come down here and just continue the other way. But in addition to that, I also have as you see, my RSI line has crossed back above this signal line.
Oh, do you want to show your screen? I think you need to show your screen. So just to.
Oh, I'm sorry. I thought I was showing it. Whoops, my bad.
Coming through.
Okay, entire screen. All right. Okay, can you see my screen now?
Yep, just coming through right now. Yep, got it.
Okay, perfect. So yeah, in addition, how his RSI line has crossed back above this signal line, that's one of the two confirmations. And then how this green candle has closed above the 13 at this point. This is no bueno. This could easily, at this point, this could keep going up and stop me out. So I just like to close these when they do, because the trades that work out for me, they don't do this. They never close on the opposite side of the 13 EMA again. And if they do, it doesn't give me the double confirmation of the RSI line crossing too, right? So this is dead. For me, this is dead. Now this could easily just do some sneaky stuff, right? And just come on down. But yeah, I would have only held this for my session anyway, so I wouldn't have held this longer than this. I wouldn't hold this over to the Asia session. So this is done. You gotta know, as you say, you gotta know when to hold them, when to fold them. This is
Kenny Rogers.
Yeah. Gotta let it go, right? This at this point could just keep coming up here. And I mean the stop is right here, right? Just make this red just for old sake. But yeah, the stop could now that it has closed above the 13. Now, mind you, it might have some friction because it's kind of hanging in between all these EMAs, right? You got the 13 down here. Then you got the 800, the 200, the 50. You got a lot going on here, right? So this could easily just come back on down, but, I'm not going to mess with that. I do, however, want to know when this flips back over, right? So I'm going to say, watch this. right? Because if this does continue to, let's say, trend higher, and just play around for some bit, and then the Asia session comes around and it closes nice, and it's still a nice setup, I would be interested, depending on what this looks like at this point again, for the same move, just in the next session, right? So yeah, this is oops, just had to let this one go. I'm no longer interested in this trade when it's closing above like that. That is not good, not good, not good. Oh, why is it doing this today? Trading is giving me a tough time today. All right, cool. But yeah, this thing at this point can do whatever it wants to do. Like it could literally just keep trending up, play up here for hours, and then break up to the high side. No matter what it does, I don't want to be a part of that. I don't want to be a part of that at all. I only want to be a part of it when it rolls back over and it closes below here, right? And it has to set up, it has to look good even at that point, right? But if it does look good at that point, then I will be interested in, you know, this. I'll be interested in this move here.
Yeah, I got something on the Aussie dollar, just Elliott wise, if I can take a quick.
Yeah, absolutely. So yeah, this is more or less what I would be looking for, because that's not
it's got a fail there.
Yeah.
Okay. Yeah, just. The quickest gold and all the rest of it. Yeah, here we go. So it looks to me, and it's a bit early to say, but I think obviously we need to see it back up like 63.10.20. But I'm thinking that we've got a kind of an A, a B, and a C down, like a three-wave move, and the three-wave moves go against the trend. So we've got this kind of big move higher, which I think is a first wave, or an impulsive wave in the direction of the larger trend. An A, a B, and a C down. But obviously, I think we need to start seeing it up here, really, to say, yep, we've seen that low, and now it's time to get in. So right. that for me would be the if I want to trade this thing, I'd be looking to buy it once we start breaking up here. I guess you've got a trend line that comes in between these two levels here. So I think once we get above, say let's call it 63, 10, 15, 20 region. That for me would then be a quite positive, I think. Bigger picture wise, it's kind of Aussie has kind of ignored the dollar decline against the other currencies lately, isn't it? It's been quite
right. It's kind of doing its own thing.
Yeah, it's funny. I think we talked about it the other day, where some of these currencies, you think, the dollar's going down, so surely everything should go down. Everything, the dollar should go down against everything, but that's not necessarily the case. But if there's a big trend move, then usually the Aussie and the CAD and all these other currencies will go with it. But what I think we're seeing here is a kind of a basing type action. But again, we do need to see it start, 63, 10, 20 kind of thing, and that for me would start to look like we're seeing quite a nice big thrust here a few days ago. Maybe a little bit similar in some respects to this, where you get a little bit of a correction, then you go again. So thrust, correction, and then go again. So that's just something on my radar now. But a little bit early. I want to see it. I want to see it higher first. So yeah, just thought I'd show you that, just to something that could be the scenario on that one.
Yeah, you can definitely make one of those two things. It's definitely been doing its own thing lately, for sure.
Yeah, and Canada as well. Dollar CAD, dollar Oz. It's yeah, I guess I don't know if they still do, but they used to call them the commodity currencies.
Oh, really?
And a separate kind of subset. So you've got the dollar against the Europeans, you've got the yen crosses, and you've got the commodity currencies. And sometimes they just do their own thing according to what the underlying, like oil has been weak recently, so maybe that's quite bad for the Canadian dollar. I don't know. So sometimes you get this this kind of headwind from some of the other markets.
Right. Yeah, it's always an interesting thing, right? But see, look at this. This candle just going higher and higher and higher. And this is what I mean when once this breaks above the 13. I'm going ahead and share my screen now.
Yeah.
This thing can do whatever it wants to do. Right? Like look at it now. This thing is going all the way up here. Right? This will be stopping me out nearly had I not closed this.
Yeah. So you've saved yourself a little bit there. That's good. That's good.
Yep. Soon as this closes above, you have to get out of this. Like you just have to, because this tends, what I just mentioned, this tends to happen a lot. Like
that's great. That's great defense. Really.
Yeah. And again, it feels much better to, for one, green on the process because I followed my plan, my trading plan, my process, right? Two, I did lose a little bit less than I would have initially lost, right? I would be fully getting stopped out here, right? It's like night and day.
Yeah, and I guess the good thing is if you get yourself, if you cut out before you hit your stop and the market goes again in your favor, you can have another go at it. That's the markets are always going to be there for you to have another chance.
Exactly. And that's what I always say, right? It's much smarter to be in a position where, not to brag, but what I'm in right now, this thing could go as high as it want to go. I don't have to worry or, stress about it or, like hoping it, praying it comes back. I don't have to do any of that. The only thing I have to make sure I'm doing now is to not let it turn over and run in my initial direction and not miss it. That's the only thing I have to do now. Right. So that's why I have this alert set here, right? Like, hey, take a look at this. Matter of fact, I probably want to just edit this and put it, because I like to just put watch this for like simple stuff like, hey, look at this, but something a bit more direct for me just to kind of see it. Because when these go off, it comes to my watch. I can easily just glance at it and it just tells me in essence. So I would just put don't miss this second leg, right? Because that's what I'll call these. This is a second leg. If it turns back around and sets up again at this same area, right? Because in essence, it kind of gave me, and this is the market for you, right? It just gave me a little fake out here, which is cool. Totally cool. Market comes, gives you this, right? I see this come down, this come back up, and it's down, and it's like, oh no, it's not that. That's not what it is. It needs to be. This could totally happen, right? It could be a move like that. So in that case, I want to be in here. It probably won't go too much above here, but if it does, that would invalidate this entire trade, right? But let's say it didn't go, and it just kind of stopped there. Stops would still be right above there somewhere. Whoops. Right? And then my TP would still be exactly where it was the first time, which is this ADR low, right? So still looking like this could easily set up again for another setup, but that's just where you got to know, right? Once again, so now I'm kind of back to the drawing board. I know where I'm in a cycle. I'm still looking for some type of pattern, right? I would still need my 4-hour confirmation, right? This candle closes in 3 hours. So I would still need this to stay how it's below the 13 now. I still need it to be below the 13 EMA on this candle. Long as that happens and this thing rolls back over, I'm back in this. I'm back in it. right? You can't sit in here while it does this thing, because at the end of the day, as I keep mentioning, if it doesn't stop you out to start with, this could easily just come down, come up, and just keep going and never come back that way. And at that point, you should be in here going long, right? Instead of trying to short this. But don't keep moving your stops. Don't not take your position off if need be. Like, follow the process. This happens all the time. All the time this happens, right? You just gotta know. Again, where you are in the cycle, what's going on, what's your next step. And this thing right now will be literally crushing you. Had you still been holding on to this position, you'd be like,
Yep. Mentally, you're mentally fighting the market.
Yeah. And nothing is worse than that, because man, majority of the time, gotta let that part go. So
sometimes it's better just to take a walk around the block when the market's getting close to a stop or whatever, and just let it do its thing.
Yep, you got to. In my case, seeing that it's not like a set forget type of thing, I always have to, again, once it closes above the 13 or below for shorts. I'm sorry, if it closes above for shorts or below for longs, I'm out of the trade. As long as, again, the TDI matches up, because literally this happens all the time. In fact, remember, this happened on gold yesterday. When I pointed out my gold trade that I got out of, right? Once this candle, because it was all below the 13, right? I was short. But once this green candle came above and closed above this 13, as you see, it never came back below the 13, and it's still above the 13 right now. Right? So once you have that with, again, the confirmation on the TDI as well, got to get out of the trade. You can hold on to it if you want to, but I promise you, it's about to stop you out.
Oh yeah.
Right. And I know that. So I know I have to let it go. Like at that point, it's literally like conditions have changed, right? If I was to pull up my trade Zella, as you see, one of my exit managements there's only 4 things for me to exit the trade, right? 1 is it hit TP, right? 2 is it closed above, I'll put above or below 13 EMA. Let me scoot this over a little bit. Right? 3 is what am I thinking of? Oh, 355 came around. That's it. That's the only 3 ways I would actually close my trade. Right? TP has to be hit. It closed above or below the 13. Now, mind you, with number 2, I do want to add and TDI confirms, right? Because you have to have both of them, right? These are the only ways I would close the trade. It hit TP, it closed above or below the 13 EMA, and I got TDI confirmation, like on this one, or 355 came. That's the only way I would actually close the trade. The rest of the time, I'm managing it by putting my moving my stop deeper into profit. I only take off partials once. I'll just let the rest of it, just play out. And then again, if I'm deep into profit and let's say my stop loss is not too far away from it, but still above the most recent swing, I do want to add that, right? But once that's it's going to come back and take me out at plus whatever I put my stop loss at, or 355 is going to come around. I'm going to close it on my own. But yeah, outside of that, there's no other way to close it. But gotta close this once this closes above the 13, because oh yeah, they about to come get you.
Yeah,
they're finna come get you. Like it's almost certain, right? All my homework. Look at this. This would have stopped you out. This would have stopped you out right here. Remember, my stop was right above here, the most recent swing. This was tagging you out right now.
Yeah, I got to say you've piqued my interest on this Aussie now. I'm going to go long at 63.12. If we get 63.12 by the end of the session, I'm in.
Yeah, you got 5 minutes. Let's see what it does.
Yeah. Oh no, I'll leave it another hour or two. We've got a little bit more time. So yeah, so let's see how we go. And if I don't get it today, maybe it might come in tomorrow. We'll see how we are if we don't get it today.
Right.
So
Yeah, we'll see. We'll see which ends up going for sure.
Yeah. I love these moves where you get a breakdown, like yesterday on Aussie dollar, for example, and gold. You know, where you get a breakdown and then the next day we see it reverse in the direction of the trend. And they can be quite good because everybody's, if they're still short from yesterday, then they're not feeling too happy as it starts to squeeze higher. So let's see.
Nothing's worse to me is that feeling when you wake up the next day.
Oh,
and yes, you're right. As soon as you move you're finna move your mouse to see if you're up or down, what happened, right? As soon as you move the mouse and it's like,
oh no,
or yes, like I hate that feeling right there. Like,
yep.
I don't even care if I'm up or down, whichever one it is. It's just the fact that my heart feels a bit different right before I finally find out the information. Right? It's just a little too close to being at the casino.
Yeah, I know what you mean. You feel like you've got, if you're watching it and you're looking at the averages, etc., you feel like you've got a bit more control over it, Whereas if you're not watching the thing, then you feel like you're not hands on,
Yeah, or you like, I would have closed it here. Like for me, when I'm in the trade, as you see, I can't even go to sleep. I have to manage it, right? With that 13 EMA, close above or below with the TDI confirmation, right? So I have to manage both of them. Like when it's I'm actually in there. So for me, I never can just go to sleep and wake up. But I remember those times when that was the thing, when I used to hold trades overnight or hold trades over to the next session. And man, it just been too many times where you wake up the next day and your position went to where, right? And then I wonder, you're like, what in the world just happened? And then you find out it was news overnight while you were asleep.
Yeah, something happened overnight.
I'm like, I just can't take this anymore. I just can't take it anymore. So those are always super, super interesting when it happens. Yeah, this will be taking you out.
Any comments from anybody or any questions?
Yeah, I'm just gonna say, you guys got any questions, anything, let us know. We're gonna jump off here in the next few minutes. Please, by all means, let us know. Well, yeah, definitely been an interesting week for sure. Let's see, what is this market down now? Because I know this thing, I was telling people, right? I was saying it on one of my sessions today that it's so crazy because the S&P is down 4.88%, right? And most of these prop firms, once you hit 6%, you blow your account, right? Like your account is breached. They're like 6%, maybe 8%, depending on which one you're going with. But 6 is a lot of them. Just to think, if the S&P were on a prop firm account, it would be about to breach it. That's how bad it's performing right now. The S&P is about to blow its account. It's crazy. It's insane to even think about that. Everyone's main goal, obviously, is to say they beat the S&P for the year. Hey, the S&P gives you 10, 7, 10, 12, whatever you want to look at it as before inflation. Yeah. You want to be Bobby Axelrod level. We're like, hey, I'm up 32% year to date. That's like the I'm hot stuff at returns.
Now you got to do it every year like the S&P.
Yes. So super interesting stuff. Well, yeah, guys. As always, we really enjoy these sessions. I hope you guys are really taking note of how we're now executing these trades, how we're managing our risk, how we are just overall being professionals, right? And just following our trading plan. You don't get to be on one of these without doing it, right? I took two losses in a row, right? Had to close half my position out on gold, and today had to close out half my position, well, that position halfway on AUD USD, right? And again, as long as I'm following the process, right? Lose a quarter here, lose a half here. By the time you hit, or you're actually following your process, and it does hit, you get you a nice 1 or 1.5, 1 for 2, whatever that'll be, and just keep on trucking along, right? That's the name of the game. That is the name of the game. All right. Well, cool, guys. That is about it. I'll do one last questions check. I know we got the late session. I feel like people go to work or something around this time, so it's not too many questions around here. But yeah, guys, we hope you guys enjoyed. We hope you're learning stuff from these lessons, and yeah, we hope you all are following along and making it all work, right?
All good. So see you again tomorrow, hopefully.
Yes, absolutely. All right, guys, take care. Be safe out there. Play clean and manage that risk, right?
All the best, guys.
All right, take care.